Good morning, June 30th. We're going to be streaming stocks, options, and futures today. Doing a technical analysis, watching the SPY, GME, BBBYQ, a few other ones that we have in the Theta Farm as well. Sub up, like up, comment down. Happy money sticks around. Thanks, guys, for the early morning likes. I appreciate it. It's 8:45. We had PCE numbers this morning. Market was already up almost 0.5%. Now it's up 0.6. So we're actually gonna maybe open above the gap. And I think we'll probably be reclaiming or retesting the high back here. It's looking like we're building a big cup now. This inverted cup and handle. I think we'll be have failed with today's open up here. So that's what we will adjust for. Double top or top with a handle to keep going up. But yeah, market looks like it wants to rally. Very lofty. Top is up also. I don't know if any of you guys held top. Up 30%. A sketchy one. You don't know with it, but yeah. It didn't go crazy like the other day, but 30% is definitely nice. Morning rally. You are numero uno. Are you still holding top? Morning buzzing. EJF, Tau. Morning. Let's go barbecue. I'm hoping for a dip today on BBQ. Morning, Bruce. A 7,000 volume. Where are you seeing this? IBKR? If I can. Yeah, I can't. I don't know how to see that even on E-Trade. SPY is mooning. Fortunately, it seems like a lot of the move's going to happen here in pre-market. So, I mean, I could be wrong, but when it gaps up this high, like sometimes you just get kind of a range and a chop, and it's more difficult to trade. You know, once you're already up 0.65%, like you might get a little retrace, but then, yeah. So we'll see. I actually did go short on the futures last night, right about here. So I'm gonna have to figure out how to manage that one. Might average into it, and then try and close out, or just close out and go long when it looks like it's a long time. I don't know. We'll see. I don't think it'll make it all the way to 444 today. I think we'll see a retest of here though. I guess it could. Could be, I mean, it could. That's another 0.5%. Yeah, it could actually. Not crazy. This trend we've been in has been pretty aggressive. Started with this little cup and handle. We had that chop. Broke it. Here we are. They're green on top. Nice. How can you buy and sell now? I've not even tried, but we can see. ETS does not accept orders to purchase or sell OTC, BB, or pink sheet securities during the pre-open or post-close trading sessions. Yeah, E-Trade won't let me. I think the our Twitter feed on Discord is down or something. I'm not getting updated with anything. Pineapple Financial. Modelo maker profits from Bud Light's decline. Microsoft Activision hearing wraps up as FTC tries to stop $75 billion deal. Sony's confidential document accidentally reveals massive Call of Duty earnings on PlayStation. Maybe KR run differently. Yeah, I guess so. 29.30. I'm looking for like 26.98 or maybe 23.50 today. And try and be patient. Could be in here too. Just 25 cents. There's more liquidity in there. The whole range. Overstock's up 2.5 pre-market. Higher NT 2.5. Keep watching top. Yeah, and share short at 29.30. Did you see RC's tweet yesterday? Work hard or please leave. I shared kind of an interesting article about GameStop's rules. I don't know what you call them, rules, but what they require of their C-suite as far as owning shares. I didn't really know all that. But yeah, Brian Cohen requires them to own a certain amount of shares depending on what position they have. Actually, a soapbox. Me with the like button? I appreciate that, I think. Thank you guys for your pre-market likes. Just getting my brain and my voice warmed up here a bit. Got 9 before the bell. Well done. About 30 minutes to the bell. We had PC this morning. I don't even actually know what it was. My Twitter on Discord's not working. See. I don't know, but SPY's way up. And flagging. Microvision's up 10. We watched Microvision for so long, just like 4x right in front of our face. That was great. It needs a position when you can just enjoy it by watching it. Is the question. I don't know what to tell you, man. This thing's... it's wild. I mean, you can always buy back in. And if it does break the pre-market high, I don't know. Sometimes they just rip out open. That's true. Depends on if you want to trade it like that, scalp it. Looks like SPY wants to keep going. Morning, Tasty. Morning, Kitty. Look at that SPY. Holy smokes. We're at 0.77. We're gonna hit that high in pre-market. Crazy. Breaking the high. 1091. It's up almost 40%. by plus 0.8%. We're so close. Wow. Mario Sound, here we go. Morning, DIY.
Here we go!
Here we go! I had to refresh my memory on that one. Here we go! Nice. I got about 10 minutes to open. I'm gonna wrap up what I'm doing here. Here we go! A deadline for the buyout. Deadlines I've heard is the 7th, which is next Friday. On Bye Bye Baby. I'm not sure if that's the whole thing or just the IP or what. Yeah, DIY. Yeah. And that was extended from, I think, yesterday, but maybe that was just a deadline for intellectual property and not the whole thing. Alright, got about 10 minutes to open. Top is up 35%. SPY is up 0.8%. PC numbers came out this morning. Here's our two tops. Could very well break through there, but then look for a reversal pattern if we do. Yeah. If it breaks through there and then shows support back on the breakout, we are on our way. 446, 452. Been quite the rally since October of last year. Uptrend has gotten out of control. Had a sustained amount and then it just got accelerated like crazy. This is all from AI, it seems like. This has been since AI started getting hyped. Because AI is going to save the world. Contest till July 11th. Is that the T+2? Yeah, maybe. Overstock's up 3%. Do you plan on probably buying back into barbecue today? RNT 2.9. Here we go. We know how the story ends. Promise to save the world for themselves. Cyberdyne. CEO. That'd be terrific. I mean, I don't know. I think that's... Is that right? Like, not to say just from that, like, there could have been a lot of reasons, but I feel like that's pretty much the timeline. Kind of in May, once AI started getting hyped. Like Chat GPT and all that really started getting traction like April, May. Just accelerated SPY because no one's going to have to work in the future and need anything. We're all going to be provided for from AI. Food, shelter, and love. Am I getting feedback? I got about 5 minutes to open. My Twitter is not updating, unfortunately. Okay, let's see if we can even get PC data. Let me see it. Normally Market Watch updates. Not seeing it there either. Well, the borrow fee on barbecue has actually increased slightly, but we haven't been updated. 127, 128, 128.6, 400,000. This is at 445 yesterday. So I think that's the last update usually on it. Is at 445 maybe? See. Oh, that day was at 330 because they ran out probably. I can't tell. They ran out all these other days. Well, anyways, usually it's updated I think by like 8:30. So it seems like they're maybe back out. Back out of, well, you know what I'm saying. We'll see if that gets updated again today. Potentially with an increased borrow fee. Thanks, Mo. Appreciate it, man. Alright, SPY's going to be opening close to the highs here. It's a pretty much a win-win. I mean, you're just capping your gains if you did nothing else. If you just sold the covered call and then just left it. The stock closes above that price on that expiration, you're going to sell them for the price you sold it at. Or yeah, the price of the call. So yeah, it is. It's great protection to the downside too. If the value of your stock goes down, you know, the covered call is going to increase or decrease in value even faster. So you can sell another one even closer to the money or in the money or whatever. So if you don't plan on selling shares, it makes a whole lot of sense to be selling covered calls on it. I'm probably gonna do some SPY dailies. We'll just see what sets up. It looks like it might be a choppy day actually. With this much of a gap up, like we might get a little bit higher. I don't think we'll have a reversal today though necessarily. It's gonna be too fast. All this momentum to the upside, it's gonna take time for this thing to turn around if it does. So that's puts, I guess. Calls, maybe it's like I said, it's up so much. If we get a kind of a nice dip with signs of reversal, then maybe I'd get some calls. Because definitely, yeah, I don't even know what the PC numbers were, but market definitely likes it. I probably won't get 445s. I'll get like 441s or 2s or 3s. Yesterday I didn't play it very smart, but I got lucky and got out with a profit. On my futures, not as much, but on the calls I did. And I was too big. I had too big of a position. I had like 30 calls, 30 daily calls. It would have been fine if it was on more confirmation. I kind of was trying to time the top and wasn't waiting for it to actually show its signs. All right, 30 seconds. Here we go. Me watching barbecue, like I said, because I might be picking it up, and it might be right here out of the open. Hopefully not. Thinking it won't be, but because end of day Friday they might try and dump it, so I don't want to be too hasty. There's the bell, the silent bell. Buys up 0.75. Barbecue's up 2.5. 30 cents. Delta's up 34%. Watch list is still waking up. Like Nikola had a little gap up. XPEV's up. That was the high before PCE. Might even take a short here in the morning. I don't know. Not on the calls or the puts, not on options. Trying to do one option trade a day on the dailies. Futures, I can come in and out as much as I want. Top ripped up there for a sec. Blitzed up to 11.5. Yeah, Nikola's up. Like Chinese EVs are up too. SPY or barbecue 29.10. It's flat. There's a new high there on SPY. Broke the pre-market. GME is flat. We get a little sell-off on IEP and Pac West. I might do some more cash secured puts on these. Closed out. Well done, rally. Nice. Yeah, a little pump up there, 11.5. So you just bought, that's basically just from yesterday, huh? Picked it up yesterday? Or no, you already had it. You've been holding it, huh? That's nice you're able to get out of it. This is such a sketchy one to just like hold and hope. SPY new high there. No more ass today. I suppose not. AC. Up's down 7. Rallying up there. Peloton up 3. AMC's down 1.7. Run is down 0.5%. Lyft is up 2%. PaySafe's up 1.34. Nice bottoming there on PaySafe maybe. Dish is down 1.5. We get up. Zoom's up 1%. That is neat. Gallon's up 1%. And short another call on Beyond. Confluence up 2.3. Interact's up 1/4. Joey's up 3. Lucid's down 2%. And Zoom's up 0.5. market's going to try and chop everybody out of premiums on their options, I bet. What happens? Most of the market moves are in the extended hours. Oh, did it update? Let's see. 119. All right. Available shares were updated at 9. That's weird. We didn't see it. I should have refreshed. So 850,000 at 9. Went down to 119%. 915. Yeah. I remember tracking a borrow fee and stuff on GME for years, like closely. And what I learned is you only, for me, I only, I really just rate it against itself. That makes sense. Because it's self-reported data, it's this, it's that, it's not real. But if you can just keep it in the scope that it's competing against itself, basically, I don't know how else to say that, but then you can maybe get some conclusion on what's going to happen. But I remember on GME, it was like borrow fee would go up, available shares would run out, and it'd rip. It'd go crazy. Like, oh, it makes sense. You know, they're out of shares, borrow fee's high, we're going to squeeze. And it would. We go through cycles. And then sometimes the opposite would happen. Like the fee would come way down, they'd have tons of shares, and that's when it'd rip. So it's not like that straightforward. But with barbecue, it seems like it's been pretty straightforward as far as borrow fee and available shares shown. It has been seeming, because we're not really necessarily in cycles. I mean, barbecue was and maybe still is, but I'm not sure if it still is on OTC. But since it's not, potentially the actual borrow fee and the available shares that we're seeing on here, whether it's real or not, it's somewhat of an indication potentially for a rally. So we'll see. Borrow fee went down and available shares went up. We'll see if they're able to dump it now. Some. But then there's, yeah, I won't get into that anymore. Top 42%, 11.75. Barbecue 29.50, up 1%. Well, AC, the covered call is the hedge. The point is, it's better than just holding the shares when it goes down, making money on it going down while you hold the shares. If you're going to buy puts, you don't need to have covered calls. Just buy puts. You can do both, but the value of the asset of your shares is going to decrease regardless if it decreases. You're just talking if it goes down a lot, and it's like you could have won more if you just sold the shares, which, yes. 30 cents on barbecue, 2.74%. Apple pushing all-time highs again. 124, 3.02 trillion. Larger than all of United Kingdom's stock market, which is the third largest stock market in the world. Yes, AC. That is true. I sense a little bitterness in those words. You high there on SPY? What about the other account with IronNet? IronNet's down 2.5. if it bounces, this is kind of the trend line I'm looking for it to hold. You're taking covered calls and just putting it into the box that you've used it in with GME. If you spend a lot of money for the shares in the first place, potentially way more than it's worth, and then you do covered calls, yeah, no matter what, if the value of the shares goes down, covered calls isn't going to save you, but it is a win-win. It doesn't hurt to do covered calls, it just caps your gains. If you just don't ever roll it, or always roll. 5 rallying up there more. Get into that first the first kind of high from before. Not the very top, but where we kind of double topped. The high, we hit it here, hit this resistance a few times. It's 444.35. Very top was 443, or sorry, 442.35. We might get a reversal today, since it's rallied up to the top so quickly. We might see it. It could be better after all, not just chopping. The fact that it hasn't just chopped already and we've just continued to rally, that's not bad. Be very careful trying to time the top on this market, though. Whew. Always covered calls, Bungie says. Yeah. It's like turning every stock into a dividend stock with most likely a higher yield than great divvy stocks. Barbecue crab until July. That's what you're claiming? Until tomorrow? Okay. Rally, did you get out of your top? Get out? Did you make it? You're 41%. You made on it? Camping World's up. Carnival's up. I sense some pain behind those eyes. You know the best cure for pain is weed. Got any? Spy new high there, rallying. GME up, not even 1%. Well done. The daily low. Nice rally. Thing is top's low kind of kept getting lower. It didn't have like an HKD type bottom. Things continue to grind down. $440 to look at the SPY. All-time best meme stock. Green dildos for all. Geez, I wasn't planning on necessarily shorting it today, but it's gonna look enticing up here. We'll say 20, there you go. Barbecue coming down a little bit, 28.90, down 1%. Broke yesterday's low. 28.80. 28.60 on barbecue, down 2%. $28.41. Buy rejecting a little bit here. First resistance we have. There's 28.30 on barbecue. On 3. I don't know if RC's involved. I mean, I don't know why he would show up on the interested parties list. But that doesn't mean that just because I don't know why doesn't mean he wouldn't for some other reason. 5 pips for 2025. Definitely a safer play. So we did hear, I did read that one guy who called in and talked to the court, and they mentioned him on RC on the, I don't know if it was creditors or one of the forms. Of the party that gets bypassed, basically, where they're not getting updated with what's going on, updates. And so he showed up on that form because he was in a lawsuit with, I don't know, whoever was suing him for the pump and dump. So I'm wondering if that's, I just actually thought of this, I don't know, last night or this morning or something. I was like thinking maybe he's showing up on other spots of the filings all because of that, because he is somewhat involved just in that capacity. Yeah, it's, I mean, no one really knows because he shows up as a creditor, he shows up as himself, as his company, interested party, and then one of the forms, I think it was bypassed party or something. I can't remember the wording, but like they made sure not to send him stuff. Spy new high, barbecue new low. That's kind of why I've been trading it too. Like dude, if barbecue doesn't happen, like that's yeah, that's gonna be pretty awful for a lot of people. So not to make any conclusions based on that, but kind of crazy to think about. I mean, much worse than GME. Like, people have lost money on GME. I lost a ton of money on GME, but a lot of it's my fault. It's not like the company went bankrupt and I had no way of making it back. But barbecue, like, yeah. 442.50. That's, I mean, it depends on what you're trying to do in the stock market. Are you an investor, a collector, or a trader? I say collector because that's the new breed of retail. The last couple years since GameStop, they just collect them. They don't invest. They don't plan on selling. They're just trying to collect. And they're collecting because they're hoping for some ridiculous number that will never happen. And then they'll sell, but that's, they're just collecting. It's like collecting Pokemon. Investors will sell when it's overpriced, balance their portfolio, whatever. Traders will just try and put money in the market and get back more. So you can't look at it like in the FOMO sense. It goes through dollar. There's hundreds of plays a year that make thousands of percent. why do you have to pick one, and why do you have to force your will on it to do that? You know what I mean? Don't be emotionally connected. Just you could pick top. Made all that percent. Like over and over. It was 100%. Could make it on the way up, you can make it on the way down. That's 200%. And it did it, what, thousands percent earlier? I don't know. Like, getting married to stocks is dumb. Divorce is far too expensive. 26 cents on barbecue. It's down 11%. Got a DRS them all. Here we go. Thanks, Rally. I loved looking up that. Mario. Morning, Joseph. Spy new high there. An interest if he's in a lawsuit. Yeah, I mean that. I mean, we know he had an interest, and he can still have an interest in it. He can still show up on those forums. So it broke the 26.98, which was one of the supports I was saying. 23.50 is the next level. If it doesn't hold that, I think that would have failed the cup and handle then. $25.68 looks like 50%. This is so annoying. Can anyone confirm that from the low here to the high? What 50% retracement would be? I can't see it on Webull. Yeah, to be invested in a stock that you can't wait for it to be over is not. You're doing it wrong, man. You should be invested in stuff that you're excited about its future and want more of it. ACCD, four-letter ticker. The accolades of a wealthy man. ACCD. It's like a roller coaster. Earnings were pretty good. I don't know. Earnings beat. Might have a continuation. The upside. 25.55, down 11% on barbecue. Three B's, one Y. I know it's good to do a lot of research and know one stock, but the best traders are the best losers. Like, to just do that for 6 months and then say, you know what, it's not anything, I was wrong, like, that's fine. You gotta know when to cut your losses or call it quits. Not to say that it's not going to go crazy and you can make a lot of money with it, but just in general, it's a good philosophy with the stock market. Good to do a lot of due diligence and do all the research, but not to marry it again. Might be an engulfing candle here on SPY. I was married to GME for years and trying to force it to do what I wanted to do, and it cost me a lot of money. Instead of letting it do what it's going to do and making money where there was money to be made. But jeez, my one long on the futures is just getting wrecked. Or short, rather. 25.55, that is 25 the 50% retracement. AMC ever mooned? AMC totally mooned. Fully mooned. In some ways more than GME. Good at losing, Kitty Daddy? That's good, man. That's good to hear. Too high today on Spy. With action sports, the top of the pole, the top of the ladder. They're you know, when you learn to fall really well, like literally fall really well. I mean, you have to learn that to be the top. And by fall really well, I mean like fall without getting hurt, and not necessarily the cheesy saying of falling and getting back up. I mean that's definitely true with everything in life, but actually falling, like physically falling without getting hurt, like snowboarding, skating, surfing, all the action sports, like learning how to fall good so you don't get hurt. You keep going. The same type of deal. Be a good loser. Be good at falling. That maybe is the 50%. And you guys use fibs. Weeble used to say the percentages. You used to have a nice little Weeble chart or fib chart and highlighted and grayed, and now it just gives me lines. What am I supposed to do with these lines? Bitcoin's dumping. Yeah, SPY's up almost 1%. Sort of all wrong. You've been trying not to fall the whole time. Can't progress without falling. Really tasty? Okay. Double corks, let's see. 15 years ago, you would have been one of the best in the world? Or is that more like 20 years ago? Jeez, I'm an old 2023. No, 15 years ago, yeah. Learning how to fall to get skydiving license. Yeah, like physically falling, like parkour guys and stuff, rolling on your back. Totally. Gotta go in the settings, really? The settings on the fib? How do I even do that? I do it like here. Reset to default. Wait, proportion? On the lines, not on the axis. Thank you. Much better. Who was it? Who's the first one that did that triple? I can't remember. Was I remember the first triple that was at least documented. Yeah, that 50%'s up there. We hit the 61.8% retracement. I think that's past the handle, but potentially, I don't know. You fib guys, what does that mean? That's the golden pocket, right? What was his name? Torstein Horkmo. I think you did the first triple. First double, actually, was not what people think. At least documented. I think the first double that people remember was... Well, if you're talking about pipe, that's something different. But JP Walker did the first double. Back in... I can't remember that movie. It was sick. It was on Chad's Gap, I think. Spy flagging up here. Barbecue had the golden pocket retracement, but I think that's too far for a cup and handle. I think you need 50% or less. Let's see. Tasty, we might actually know each other. $818 AMC 4 puts. Orstein, yeah. Yeah, you called it. At least documented. I think someone else said they did it, but there wasn't a big like presentation around it. Brian Gucci. Dang, dude. Aldor Helgeson. I know both those dudes actually. I've met him at least. I met Torstein when he could barely speak English. Like, you could barely understand that, man. That kid kills it. He's like old now though, huh? Just like us. All old. Iron Net. 0. Spy's flagging. Terje Hackinson, yes. Methods all day. He doesn't still do his huge quarter pipe comp, does he? Is that Aaron Style? Is that Terje? Yeah, that's Terje. Nicola's up 10. We'll take on for a long possible meeting on the last RT tweet. Which part? What do you mean? What I shared on Discord or? Generally, cups with a longer and more U-shaped bottom provide a stronger signal. Avoid cups with sharp V bottoms. I mean, okay. Ideally, the cup should not be overly deep. Avoid handles that are overly deep also, as handles should form in the top half of the cup pattern. Yeah, top half. Like, it could still play out. But it hit below the top half. Does ideally, though. See if this 27 cents is the new support. Up kind of head and shouldering with pre-market. Japaner, yeah. Terje, man, dang. It must be manipulation, kitty. You're just genius. EA game. In the game. Steep. That might be it on barbecue. Get a little entry maybe. Had a big bounce actually from the bottom. Doesn't look that big because of how big this move is, but actually pretty significant. 10% from the bottom, wow. Ubisoft. Microvision up 12. 12.5. Captain Retail Plan. Okay, I started getting into some barbecue. I'm a little cautious though, because this is past the 50%. So I'll probably have plenty of time. To continue to build a position. Yeah, I remember when Microvision was, yeah, people were hyped on Microvision. Well, I don't, yeah, I guess because it used to go crazy. That was one of those crazy ones. Moving up here, 13.8. Hog for sure, man. Microvast. Yep. I always get confused between those two. Rally trying to get back in already? Oh no, be careful. That's a mistake I commonly make. After I've exited and taken profits, I'm gonna hop back in to ride. Sit on it. Made your money on it. Just chill. Not missing anything. Got a bear flag there too. The gap. Spy new high. There you go, spy. Made a little shoulder here. Or it's just a flag, we'll see. If we make a head on the high. Hey, I was bringing a ship down to the whatever that is before it bounced. I think well, all this bank stuff has caused a pump in it, but otherwise I think crypto's going to come down with the market. But it is interesting to think of how it could be kind of inverse with the banks. Zoom, zoom. Adobe's up 7. Interacts flat. 443 on SPY. I don't know what you mean to say hook, but I see a bear flag that's breaking down now. Whoa. Bitcoin's way up. Ethereum's up. Roll up after a big drop. Now you're just talking all these fishing terms. Drops after the J hook. Another 4-letter ticker. Therapeutics one. ETXG. 65%. Oh, it's a Chinese one. Reverse split as well. Reverse split, Chinese squeezer. Combination is icing. It's a fake boy. Got a wick up there, doji on SPY. Channel's been pretty aggressive. .11%. this cap and go on SPY. Well, essentially double top, maybe a handle. It's bullish. Otherwise, maybe a little higher, or not. Just a double top and then come down. Come down, little retrace. Any other stocks we rip a few days after? Yeah, potentially. The Chinese pumpers. Alright, MC production. Ollie Etlin is the goddess of turnarounds in chapter 11, that is true. But just because they get restructured and come out good, where are shareholders left in all that? Or 1316. Well, we can't make shorts close. Only not even potentially a QSIP change or a new stock, because I think they can just let their shorts, their FTDs, just go to die in the DTCs, whatever warehouse of dead FTDs. Doesn't look good on their balance sheet, but they would probably close if there was new QSIP or new stock. But I don't think they even have to in that case. The only way that I know that they have to is margin. And even that can be pushed so far when you have bigger hedge funds like bailing out smaller ones to help them pay. That was crazy on GME when we saw that. Citadel got that huge cash infusion, and then GME dumped for months. And then Citadel got an investor or something, someone on the board, which they've known to never wanted new people on there. And that also brought a bunch of cash. Then GME dumped. And I'm not even that much like anti-Citadel necessarily, like, I don't know specifically, but that was crazy to see. And then of course with Melvin. So even margin, they can skirt around that in ways. Don't be so jaded. Shorts have closed, yes. That's a good point, Joshua. I guess yeah, but that's all before chapter 11, right? So Barbecue never went to chapter 11, and it just stayed on the NASDAQ and then was just turned it around. Now that it's in chapter 11, they're selling off assets. Like, it's been partially liquidated already. So I think that's a little different story. Because I don't know. I'd have to look at other use cases. I'm not sure how many companies that get restructured and come out of Chapter 11 do shareholders win on that. You know, there's Hertz, there's Krispy Kreme, there's whatever. Was it Krispy Kreme? No, not Krispy Kreme. That one actually IPO'd recently, I think. There's examples where they've done better, but is that typical? Well, those borrow fees they won't probably stay that high for a whole year. That's annualized. The best way to know the actual borrow fee is just to check with your brokerage. But I can't short any stocks in OTC with my brokerages, so I don't even know. Riskier now. Yeah, it seems like it. I mean, EFE was saying that with, you know, companies that seem like they're going to go bankrupt. A lot of people consider barbecue bankrupt. I know it's not technically. It's in Chapter 11, so bankruptcy protection. But even DFE, like, I mean, yeah, he might be in it. I don't know. But at this stage, is it like, well, they're already starting to liquidate stuff. It's not like it's different than it was for GME. They turned around without going to Chapter 11. Because that changes all of it. That makes it a court decided matter, basically. They're just hoing up the phone. That's right, they just don't answer it. That's a great reference to Huang. I just didn't answer the phone. They actually do call you. It's crazy. I've been margin called many times. Like, I've gotten the ones on the brokerage, like the warning or whatever. But then they actually call you. Like, oh, I didn't answer the phone. I'm not answering that. I know better. Bill Huang taught me. Yeah, for sure. If the stock's not trading, the borrow fees don't matter. It'll be seller boxed or whatever. However that works. See if we're just getting a flag up here or if we're starting to reverse. I'll give it time. Lots of downside potential. Don't need to rush it. Yeah, so far OTC has been way better. It's I sold before OTC, and I bought back in the day it changed over, and I saw what was happening. So yeah, I mean, it's OTC has been nothing but good for it, seems like. I don't know how it would look in OTC. It's very strange because this is definitely an exception to OTC stocks. The way this one trades. I mean, it looks like it could break today near end of day. and we get in or sell. I picked up some barbecue here. I scaled back in a little bit. It had more of a retracement than I wanted for the handle, but it was the 61.8%, which is, you guys love that. So potentially more down though, 23.50. I feel like it's probably late enough though that it's gonna be make it or break it. You know, I said that like a week or two ago, but then they pushed everything, all the deadlines back. So at this point, I'm not sure we're gonna get much of a move before it's on something, a catalyst. Get that VWAP move right there on SPY. It's weird. Barbecue came down a little bit more there. 26.70. What are all the gray areas? Like, all this, that's weird. It's like it's extended hours, but this is a much longer time frame. No, what are we looking at here? Oh, AMC. Okay, that makes sense. Like, what the heck? Oh yeah, AMC loves to bounce on that 4. They have their. Do we have any? I guess we don't have any results from their court though. I think that could be a pretty big catalyst for this thing to drop. After hours, yeah. $50 by Friday was a scenario if we held this support, this 35.70, I think. We broke that. Wasn't looking very good. I was looking for a drop into end of the week. Because that was the breakout level. Just trying to figure out if we hold around this level. I don't know, I think handle's probably off the table. Good news is there's no RSI divergences there. We had a higher high, but so did the RSI. So yeah, could be just kind of flagging. Did double top, but doesn't necessarily mean it's going to double bottom. It could be a deeper handle. Yeah. But I'm not sure a whole lot of moves are going to play out before fundamental news. Would be nice though. We can keep trading before anything bad happens. Could be good, but could be bad. Microvision up 17.3 and rallying. Well, that's a good point, Kitty. I'm not sure. I heard it was yesterday. For some reason I thought that it was going to be wrapped up yesterday. But yeah, probably. Maybe it just started yesterday. Yeah, I'm not sure at all. I bounced off that 9 moving average, so it's still in this upward channel. I'm looking something more like this, maybe. Yeah, new high of the day there on SPY. Thank you. Yeah, BlackBerry has been a nice uptrend. Up 2.7. Dead earnings. Let's set this off. A lot of volume on it after earnings. Probably a good trade. GME is flat. SPY. Some would count this as an engulfing candle. I like the body to engulf the other body. But looks like it's wedging here at the top. See which way it breaks. If it breaks to the downside, we might have found a top. I see it better on the minute. Little double top there. Barbecue 26.94 down 7.7. Big doji on the top side for SPY there. Might be making a move back to VWAP. I like to see it slow down and then come down, forming an actual top, and not just consolidating and then bouncing, ripping. Up over 1%. Patience. In case of blocking their share offering, which they say is required to avoid bankruptcy because they're bleeding cash. Resolution. Maybe. Barbecue's doing good. Down at cheaper prices to buy it. 27 cents, down 7.5. It kind of went past the 50% for the handle, which is what you want. So there's that. But it did hit basically right at the 61.8 retracement. So and bounced on there. But yeah, we'll see. I picked up some more here. Might pick up some more by end of day. Seems like this level might be it. But never know on a Friday. I could dump it in the last 5 minutes. Which could happen either way. Line's coming down there a little bit. Big rush 50 cents. Yeah, we're gonna have to be patient on that. Maybe next week. If we don't get news by then, this rally could continue. Yeah, this 36 is where was our high in OTC, so it's a big resistance till it's not. At this point, it is the resistance. I did add to my futures short there. I gotta be careful though. Very, 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 very careful. Here we go. Microvision still going a little bit, up 17%. GME coming down with this, 24.69, down 0.8%. X paying up 10. BBBYQ just popped through VWAP a little bit. See if it's going to barcode in this range. 28, 26% range. The Twitter thing is still down. Can't remember what bot is doing this. Oh, tweet shift. Down. Volume should decrease as prices decline or remain lower than average in the base of the bull. Should then increase and the stock begins to make its move higher, back up to test previous high. Yes, we have that. Increased up to the high. Now it's decreasing. Bye. On down to 438. It'll take time for SPY. Still pretty early though. Like I was saying, I like how it climbed up straight away and just didn't chop around in the morning. So climbed up to the high. We're either going to confirm that we're breaking out or this is the top. I think here shortly. Because a bit more consolidating and then a slow grind up and we're going to be above there and then this will probably be support. Or this is the top and we have the rest of the day to kind of make our way down and fill this gap and do all sorts of fun stuff down there. Yeah, I'm thinking this might be might start scaling into some buy puts. It's so early, I'm gonna get 440s. Wait, is today quad witching too? But today? Just picked up some more barbecue there. It's right above that barcode level. I have an order for down here at 26. Need a barcode. I'm gonna give it time though. Friday. Momentum's down. But seeing it break out of the upside of this barcode, bullish. Okay, and I got some SPY 440s puts. It's possible that we're doing head and shoulders and we're just going to come down, be nice and easy. But it is possible we're still kind of actually bull flagging. We'll bounce somewhere around here and then make it another leg up. So wait and see. It's good to see barbecue back up there above this barbacoa range. Just above it. So it did have that golden pocket retracement. A little further than a handle, but strong bounce off of it so far. So I've been kind of picking up some more. I have some orders for down here also. Five bounce back off of VWAP. See if this turns into resistance now, or if we're just back in a bull flag. I mean, it's a heartbreaker. You made 40%. Yeah, just time. Stocks all day. You didn't ask the element of time, so yes is an easy answer. I am the floor. Wait, is it good to be the floor? Do I want to be the floor? AM's chart actually looks good. Accidental awesome chart find. That AM breakout right there. Supposed to be a C on there. So SPY could still get that chop even up here. I still believe in SPY. I think you can do it. I don't know though, it is Friday. They'd love to just burn premiums today. Have most of the move. Market. I have a put option for SPY at 441. What's the expiration? Has it really? I remember GMER moving up. I actually bought GMER at one of those times during GameStop's pinches. Not because I didn't recognize it, I just typed it in and hit enter, and by the time I noticed it was the wrong ticker, because TD sometimes just fills in whatever it wants when I type in GME. You know you should not be entering that trade. You're trying to go so fast. Stocks all day. What's your expiration on that? Their contract. Today. Depends on when you bought it, I guess. If you'll be green on it again. I imagine you will, but you know, SPY could just chop around or even keep rallying. So I have some dailies also on SPY. Or for 120, you bought it this morning? Bought it at market open, looks like. Yeah, it's too soon to tell. It looks like it's building a head and shoulders, but we could still be in just a bullish channel where it's bouncing off of. So, or it could just chop up here in this range all day. But I do like the head and shoulders, and I like that it's at a resistance. So you do have that going for you. Gap doesn't have to be filled today. Or ever. SPY does oftentimes fill gaps, but it doesn't have to happen today. I mean, we had a gap. Let's see. We had a gap up here already that we were filling on the way up, and we gapped above it. So there was already a gap there right here. And now we have a bigger gap, but we're above it. We gapped above the gap. It's looking like the head and shoulders could be playing. It's still early though, it's 11 o'clock. It'll take time for this to fully roll over. Find the gap. Lords, why are you so sad? Boards is up 13.7. GME's down 1%. Oh man, Root's getting dunked on. Down 20. Did that fall through? Root says it has no actionable offer for company. Interesting, it wasn't enough. Just kidding, I don't know why. That's what I like to think. Their space is continuing to sell off from its Selling the news event. Yeah. With options, like 0 date options, unless you're just looking to scalp, like literally within a minute or two, not even, maybe less than a minute. I try not to play in the first at least 10 minutes. Sometimes the first hour. Sometimes I'll wait, like yesterday. With the options, I waited all day. Or no, I didn't. I actually didn't wait long enough, but let's see. Here's open. The futures I can get in and out of, but that ruins me. I chopped through futures and lost a lot in this chop. Options, since I'm only trying to do one a day, I play better, which I started with the futures too. Barbecue's moving up there. Yeah, that's what I want to see on barbecue. Do it. But yeah, yesterday I waited until here, and I was too hasty. I knew it. I was trying to time the top. I wasn't waiting for the confirmation. I waited till like here to get my first put, which is almost like 12 o'clock. And then I got more once it confirmed it was breaking, which wasn't till 1 something. Then I held those still down here. So you don't always get structure like this though. You know, nice head and shoulder move or cup and handles or flags or wedges. Sometimes you just get chopped. So those days you can just not trade or just get better at scalping. That's why I say today, like, we might just end up in a chop of premium, not some more sustained move. 28.68. Barbecue's up 1 point, or sorry, down 1.8, but had a pretty good bounce off of there. Still have another order. I'm gonna wait though. I'm just gonna leave it there. I do like this bounce off the 61.8 though, off that golden pocket. Yeah, someone's saying that. Someone's saying that, Josh. Struck it down. Market doesn't seem to care. I wish the Twitter thing was working. No, you're fine. Thanks for sharing. Yeah, I'm kind of slow on the news today because upcoming, or it normally does. ESPN to cut some of its commentators as it negotiates contract renewals. They could be building inverse head and shoulders here too. Head, shoulder, shoulder. And that's when you end up just with chop. You have head and shoulders, inverse head and shoulders, and decisiveness. Here's your inverse head and shoulders. See if we reject a new high or if it breaks out. And chop. All right, 11:15. 15 minutes to EU close. Thanks, guys, for your likes. We're at 28 likes in the day. Barbecue. So far, it's bounced off that golden pocket. And essentially a deep handle. Yeah, SPY just looks kind of choppy to me at this point. It's weaker though than it was. Yeah, it's definitely starting to reverse. But when it bounces on certain supports, it goes back up. Yeah, the upside momentum might be over, but doesn't mean it's going to start coming down. liquidity's or the liquidity's probably pretty low today on SPY. Like people are probably already taking it off, taking a short day. Got the inverse head and shoulders. See what happens when we get to the high of the day. Hey, Dink. Dude, what's up with that RSI? That's so weird. You see this? On SPY? This morning it opened, it was at 86. We climbed up and it just stayed flat. Perfectly flat. That's so strange looking. VWAP looks weird too. Barbecue 2865. It's only down 1.8% now. I got filled on some SR puts. SR January 1 puts. Yeah, retest it'll come down, but just how far is it going to come down? Is it going to just stay trading in this horizontal range, or we actually make a move further down? When does that happen? That's where it's just kind of like chop or trading in a range. But you don't know, on the inverse head and shoulders, you come up, test the high, and keep going. Looks like it won't, though.
Dad, you know
Ah, Fisker, yes. We got $1 puts on Fisker. I think Fisher's gonna go bankrupt. Just don't know if I have enough time. I don't know if we're gonna have enough time. Maybe Bed Bath & Beyond. I don't know if we're gonna have enough time. Apparently the contracts I just bought sold for 31 cents this day. May 2nd. Just bought them for 7 cents. So I'm hoping for a little velocity to the downside. However, if it does get actually goes down, it'll become a lot more valuable than 31 cents. Strange. Probably only got a few transactions. I'm probably fat fingered or something. Well, that's why I have a limit order there and try and catch someone market ordering that contract. I'm the only one selling it. Hey Russ, guten Morgen. Still holding it like a regard. Hey, I bought some today. One's up 1%. Eyes coming down a little bit. ACCD. I'd have to look at the earnings. Seems like they were good with a gap up. Exceed guidance. All from guidance. There we go. Beats on EPS, beats on Sales not by much. Wait. EPS was positive 52 cents. Estimate was negative 62 cents. So it killed it on EPS. Oh, this gap EPS beats by 0.09. Yeah, I think it could keep going up. I mean, looking at the chart, you have this gap and this earnings that kind of convolutes things, but solid earnings. You could very well have continuation from that. Some gap fill up there too. Eyes moving down a bit. Gonna have to see if Jenny can provide the news. I am out. Sorry to hear that, Beck.
Some monumental moves worth noting in 2023. S&P 4440 today, up 1%. The Dow is up more than 0.5% at 34,346. The Nasdaq is up 1.5% at 15,160. And with this gain, not a 52-week high for the Nasdaq though. I just double checked. And the Russell up 0.5%. But of course, the Nasdaq is already up 30% plus for this year thus far. I'd like to take a look at developing stories right now this morning and welcome in Renita Young, senior markets correspondent, to talk about XPeng. Back to the EVs, getting a boost today. Tell us all about the story. What are they watching?
Well, this stock is trading too close, very close to a 9-month high today, and it's all because it launched its SUV, the G6 Smart Coupe, and it's competitively priced versus Tesla's Model Y SUV. Now, the G6 is starting at around $29,000, just under $29,000.
What? Yeah, right.
The current Model Y starts at around $30,000 in China. It's got so many new features, and that's why analysts are positive on the pricing strategy for the value of what you get with the car. Now, it does have a full scenario advanced driver assistance system with it. It's got 31 smart sensors. Xpeng says that its features allow the vehicle to visualize panoramic road conditions in real time, right? 13 safety systems. It'll be able to assess risks in the front, back, and the side of the vehicle, and it requires just 10 minutes of charging per 186 miles of range. It's also got fast charging stations, which will allow it to be charged at less than or more than twice as fast as other EVs, and it can also handle
Safe barbecue bounce on VWAP, or if we kind of a double bottom on it here.
All of the different attributes of this, we see some analysts say that deliveries of the vehicle are expected to start in China in July. And looking at its rivals, they're also up. Probably on this news too, Li Auto, NIO, Tesla's even up as well. But CLSA raised their price target on this stock to $13.10 from $10. You can see it's already surpassed.
It looks a lot like the Model Y. Pretty ugly.
To reach 10,000 monthly sales units, and it'll help Xpeng reach its goal of 15,000 monthly sales units in the third quarter. That's what.
Don't really show any picture of the back.
But all these
looks like a Fisker from the back.
Nicole, with that, the company is still expected to have some risks.
Barbecue.
Into the second half of the
Through VWAP.
As I look at this, first of all, you know, you talked about near 9-month highs.
If we get a 26 double bottom.
Absolutely right. What an incredible story for Xpeng.
Yeah.
And while we're all focused on Tesla, which is a great leader in this EV market, I didn't realize that this stock this week is up 35%. This month is up 70%. I mean, I think everybody wished they owned this one.
Yeah, I think so.
Yeah, what are we in? Wait, it's only June 30th. All right, so for this month of June, up 70%. I wish I made that. Renita Young, thank you so much.
Of
Senior
course.
Markets Correspondent. Nice to see you. Thank you. Okay. No, I don't own it. All right, good to see everybody there looking at Xpeng. Now it's time to spotlight some bullish tech picks. Melissa Armos with us, founder, owner of the Stock Swoosh, to talk about the recent rally we've been seeing. Melissa Armo, great to see you. I haven't seen you in a while. Why don't you talk about the tech rally? Obviously, we've seen the NASDAQ up over 30% and a lot of names that have been driving this market, period. Where do you think we're headed and why?
Well, I think it's really interesting because we're going into a short week for the market next week, but then after that, the week after that, earnings season starts. So while, you know, everyone's optimistic, yes, the market's been bullish. Yes, we're up for the year. Yes, we've rallied 6 months. The backdrop of the market is too many uncertainties in my mind that will continue this rally. So I'm not as optimistic for the second half of 2023 as most people are, because we still could have a recession in the fall, towards the end of the year. And again, some people are already still saying that. And again, we already know that the Fed is going to increase rates at least a half a point between now and the end of the year. And what if they decide to raise rates more? This is more of a relief rally because they stayed the rate hike this month. But I would say it's really going to be driven by what happens in the summer months, July and August, the rest of the summer. What happens with earnings season? If you have companies come out and you have companies saying, we're expecting less productivity, like they don't meet their revenue guidelines, then you're going to see some selling to the market and some stocks that have been rallying that are not going to continue.
Not likely to give it all back, though. So if you have a recession or a slowdown or earnings estimates come down some, do you think that there's a chance that we give this all back with the NASDAQ up 30%, the S&P up 15% this year? Do you see that or not likely?
Well, in order for that to happen, it could happen. I'm not saying 100%, but I'm saying, yes, it could happen. What would create something like us giving up all the gains for the year? That would have to be a catalyst or what I call an event. What would be an event? Something that we saw that almost happened last weekend with the conflict in Russia and Ukraine escalating. And you know, if NATO gets involved, if we actually really get involved or something happens between China and Taiwan, yes, then that would rock markets. That could possibly take away all of the gains that the S&P and the QQQs have had. for the entire year of 2023. Again, I'm not saying that happens in the next 6 months, but I'm saying that people need to know that it could. So if you're up, there's nothing wrong with taking profits. Book some of the profits that you've had so far this year because we have had a run up.
Right. We got our latest PCE inflation report, so things are looking, we're seeing inflation coming down. We're
Supplies
watching
coming
that.
down to VWAP here.
In the meantime, let's talk, and we're going to have a panel on that later. NVIDIA and Apple, two clear winners of 2023. In fact, Apple at a new high today. Tell me a little bit about those names. You think they still have some room?
Definitely, if the market continues higher and if Apple has good earnings, same thing with NVIDIA, they will run up. Again, both of their earnings out for a couple of weeks. But I expected Apple to be over 180 and really 190 long before this week. So yes, I'm happy that it finally rallied and made brand new all-time highs, which it did today. In a normal bullish market, the bullish market, the good old days that we're used to, Apple already would have been at 200, Nicole. So yes, you can cheer up and down. Apple is bullish. That is one of my top watches. NVIDIA too. Again, that sector is strong. The problem is you're not seeing an overall broad-based rally in multiple sectors enough. One of the problematic sectors is the banks. And again, they launch earnings season on July 14th. So, and Apple and NVIDIA don't report until after the banks report. So you're not going to have the market continuing higher and make brand new all-time highs without the financials. They've got to get going. But yes, I do like Apple. Yes, I do like NVIDIA. And those are one of the things, if you want to hold those things, you could.
And then we turn our attention over to Baidu, which says China to me, Wells Fargo, which says banks. But these are sort of individual stories, too, because the banks just passed all the stress tests and everything. But your thoughts on what's going on with these two names?
If we don't break it
Well, I think it's great the banks passed the
and
stress
hold above it
test, but
today,
you
I
gotta
don't think
look
we're
at it.
going
They
to
were
go above
prepared
it
for it more
necessarily.
so than
Oh,
anything. They
maybe.
had done the stress
No, I
test
say take that back. We could make a
before
handle
all
and
of
keep
the
going.
havoc that happened earlier in the year, and maybe they wouldn't have had the same outcome. So banks have been beefing up. You've seen all kinds of offers out there. 3-month CD rates and all of these bonus offers. Open up an account, get $1,000. So you're seeing banks compete more for for deposits, for high interest rates. They want customers so that they can pay them 4.5%, 5%. So banks beefed up their assets by doing these offers, and then they did pass the stress test. But it does not mean, Nicole, that we're not going to see another regional bank fail between now and the end of the year. And of course, Baidu goes with China. They had some negative data that came out, and that fell. And I do think Baidu could possibly be lower even into next week, into the holiday week.
Right. That's another point, a holiday week as well. Melissa Armo, nice to see you. Thank you so much for being on today. The stock swoosh, appreciate it. Thank you, Melissa. Coming up next, we're going to take a look at Toast. Okay, we're looking at this restaurant wholesale company, Toast. Tom White will take us through the news of the day and an example trade as well for the disruptors. Don't miss it. Stay with us.
Happy Friday to you too, Daniel. I don't know, that the combination for voice and her mic was not the most desirable sound in my earballs. You lost your membership in the last 30 minutes? That's awesome. And SPY bouncing on VWAP. Sounds good, Joshua.
360, it's time for the Disruptors, and Tom White's with us, senior options contributor here on the TD Ameritrade Network. And you're looking at
Sage
toast.
advice.
Why is toast
The
on
word
your
I've never
radar
used.
today? Good morning, Tom.
Hey, Nicole. Yeah, this one it's had some news recently in the last couple days come out. You know, this is a service provider software company for restaurants across the country. Over
Sage.
40,000 restaurants where they provide a POS system for that restaurant and other services. And their main customer is the actual restaurant that's using their service, right? That's how they get paid out. But recently, over the last couple of days, it's come out that orders over $10 using the Toast system, they're going to add a 99-cent fee to each order over the $10. So now, in essence, a company that was reliant on the restaurants to pay them is going to add
It's a little loud.
nearly $1 surcharge onto the customer's bill. So this is going to add to
Did you guys
revenue
hear that?
generation relatively quickly. It's supposed to roll out in July. For this. Now, Toast hasn't made a profit in the 10 years that they've been in existence, but they've made inroads to become profitable, and this just might be the one source of revenue that's going to push them over the edge. Now, one of the caveats to this is Biden's administration, they had that junk fee push, which is warrants watching as far as, is this going to be implemented, and is going to be continued to be implemented, because the fact that the administration's trying to pull back on all these fees. When you buy something that's $10 and it ends up costing you $13 with all the tack on fees, that's going to be a concern for this company moving forward. Now, Q1 last quarter in May, Toast saw revenue soar 53% to $819 million, even though they're not still profitable. Subscription revenue rose 70% to about $107
What's
million.
Toast?
While FinTech gross profits jumped about 65%.
Multi-purpose built for the restaurant community, a digital platform.
Jumped 55% to nearly $1 billion.
Provides a suite of software
total addressable market huge for this
as a service.
They've got restaurants only right now, over 40,000 of those, Nicole. What if they start getting into the hotel side of the business, more travel industry side of the business? The total addressable market is potentially about $55 billion. And they're taking market share from some of their competitors. Some of the GMVs that Square has been losing, Toast has been gaining.
Yeah,
so
sounds like that.
This added 99-cent fee for this company could push them into profitability, and that's why you're seeing the stock up about 26% so far this year.
Yeah, I mean, amazing. And as you said, hotel, I was just reading about Marriott, which I know you were looking at this information that
the play is still valid.
Hotel restaurants technology available to
the play is still valid.
Beverage outlets for the Marriott
His
Select
name
Service hotels
was
in the United
Brian
States,
Polsner.
Canada. This could really be the beginning of,
What was his name again?
What, as you said, maybe taking some market share and really giving a boost. And this is also some recent news in June, too. So now what? What do we do about an example trade, Tom?
Well, I looked at a strategy that's a little bit more aggressive.
Robert,
it's, to the bullish side. So if you think this is going to play out where, you know, on their update come August earnings, that they're going to give some guidance that's going to be reflective of these fees getting implemented.
Robert, I had the last name right,
That
Polson.
means for their
I said like
continued
Polsner,
growth,
Polson.
especially in those subscription services year over year.
I love how you just
So
know
we
that
looked at a
reference.
combo trade here where I'm going to buy a call, which is bullish, right? When you buy a call, you want the stock to go higher.
Morning, Jay from the Bay.
To actually afford that or lower the cost entry point for that bullish call, I'll sell an out of the money put. So I went out to the September monthly cycle. So that's about 77 days till expiration here, where I'm buying one of the September 24 strike calls, and then to help finance that call,
You don't think there's going to
sell
be a
one of the
baby auction? What do you mean if it doesn't
22 strike
happen?
puts in September. You're paying roughly about a 20-cent debit for that. So you can see here from the risk profile, between about 24 and about 22, you've got risk of about $20 per spread that you put on. Now, the break even on this one, 24.20 to the upside.
Where is my
You don't
money?
need that big of a
Great jam.
massive move. You're giving yourself nearly 2.5 months until expiration on this one. But
Like
you do
the
have to be
cover
comfortable owning the shares
by
if
Maxine.
the stock does
I don't want to
slide
say her
below
last name.
22,
Siren.
but pretty
Just like
aggressive,
the
bullish
piano.
call here, combo spread here.
I like all the different covers of that
All right,
song.
Thank you for that, Tom White. It's great to see you. We'll catch you on Fast Market as well. Thank you, Tom. Good luck there at Toast for the disruptor today. All right, coming up next, our 360 round takes a look at today's
Oh, if there's no
personal
buyer?
income and spending.
Yeah, that would be bad. RC buying overstock? What? 1.4 billion? How would this make sense? You should have bought it a couple weeks ago. It was like half the valuation. It's almost doubled. Think about it. Think about it. Yeah, 6th Street said they wanted to get involved. A credit bid. The leftovers? No. Why would it be rising if RC was buying it? Oh, from him buying, you think? No, dude, come on. Okay, now we're getting into the filthy tin.
Two-year lows. People maybe are feeling that the Fed doesn't necessarily need to raise 2 times. Stephen Colano, your thoughts?
Yeah, I think the report today was just a waist-high fastball in terms of what the market backdrop has been kind of pricing in.
He's our ticker to BBBY.
Growth, a lot of reports come out this
And
week
maybe we'll
better
get
than
their
expected, yet
share
inflation is
price.
stubbornly ticking down, but coming down within the time frame that people are expecting. And so we look at right now, rates haven't moved much, but equity markets are up, and the probability of interest rate hikes coming
They
in
need SPY
July,
to
you're just
flush
now
this
about
VWAP,
pricing
or
in
we are
25
just a
basis
premium.
points, but that's still consistent with the backdrop that even
We are
Jerome
just
Powell
part
put
of
in
the
last
farm.
week, which is, hey, we might need 1 or 2 more hikes, but
We are the
we haven't
crop being
surprised to the upside.
harvested.
So it's just right in line. Again, a waist-high fastball for what market expectations we're looking for out of this report.
Even with the Fed's, thank you for that, Stephen. Even with the Fed's aggressive
Yeah,
monetary
barbecue.
policy
It's
that we've
made
been
its pullback from the
seeing,
high.
you still
The
have
golden pocket right
things
here.
coming down, but the economy's still
Pretty much
looking
right on.
strong, and while there's
So,
pricing pressure,
not bad.
what say you? Where do you think the Fed goes?
But
how do you feel about the latest
25.73
print
is
that we got today?
the 61.8.
Yeah, generally speaking, we're of the view that the
It
data
hit 25.55.
continues to surprise to the upside pretty across the board. Now, today's data on inflation as well as spending it was not too hot, it wasn't too cold, so it was kind of a perfect Goldilocks. As the other guest said, we have a market that is reacting in a positive way on the risk side, and we generally believe that the data will continue to hold up longer and better. And therefore, this risk of recession just keeps getting pushed out further. But our general view about the Fed is we still very likely will get at least 2 more quarter points from them.
You bought a share barbecue. Don't do it in honor of me. You're probably going to lose that
CPI, the data is
27
simply
cents.
too high for them to talk back their strong language to fight against inflation. And so we have a long ways to go still in their eyes to get to something closer to 2% when we're sitting at 4.5% fairly stickily.
So at this point now, and to your point, I mean, investors we have consumers that are being a little more selective. Now what they're making some money in the stock market. They all got hit last year. You had a triple bear market with cash bonds and equities.
Triple bear.
Household wealth went up during COVID because they got some fiscal policy as well that helped them along. But now what, Stephen Colano? I mean,
That guy represented like
doing at this point?
a tenth of the bondholders, I think.
A
Seaman.
lot of good points there. What we've been doing in clients' portfolios on their behalf.
Most of the bondholders, we don't know what they're thinking or feel, or who they are.
Rally that you're seeing today, right? But the narrowness of the market has us worried.
Yeah, there you go. It's 14%.
There's almost 1,000 basis point spread between the market cap weighted S&P 500 and the equal weighted S&P 500, right? We'd like to see, and hopefully we'd like to see a broader participation in markets moving up. So what we're doing there is actually moving out of growth specific trades, reducing growth as an isolated factor in our client portfolios, and actually participating in the growth trade is part of a core allocation. So you look at the top 7 or 8 stocks in the S&P 500 constitute a little bit more than 25%. Those stocks are leading today. So we want to participate in that rally, but have more of a broader underlying exposure by overweighting kind of our core equity allocations. At the same time, we're starting to pull back in some of our smaller cap names. We do see with lending conditions starting to tighten significantly, regional banks are tightening up on the lending conditions. That impacts small mid cap companies. So keep the exposure, but we're looking for more quality free cash flow generating companies. And then last but not least, we like non-US international, right?
Bouncing up off of VWAP.
Talking though, on the currency adjusted basis, the Nikkei is up 17% year to date. So there's a lot of momentum there. So we're looking for undervalued opportunities.
That's what I don't get. Why were they fighting so much to seemingly push them into Chapter 7? I feel like bondholders would be better off if they were able to restructure.
Well, late stage markets, and I do believe we're in a late stage market, are pretty notorious for fairly narrow market leadership. And that's what we've been seeing this year with the acceleration of tech stocks in particular, and the U.S. domination kind of continuing, particularly more recently. And so our general view is you can't afford to sit on the sidelines and not participate in this type of environment, in this late stage recession keeps getting delayed type of view. But at the same time, you need to be very conscious about the amount of risk that you're taking and have some fairly shallow stop losses, because I do think we're in an environment where it's just as easy for us to go up 10-ish% that we've seen this year on the S&P, but also give that back fairly quickly. So we are still leaning towards a bit more quality, but we do include tech stocks in that quality bucket. And more importantly, I think on the fixed income side, we're a little bit more cautious about where credit spreads are and where we're taking credit risk. And so high grading your
I don't know if he hears the music.
Priority for us, particularly given where high yield spreads are and other lower risk type of fixed income is, trying to gravitate towards the more consistent higher yields that we're getting in the fixed income markets.
Thank you both, Nate Vogt and Stephen Colano. Thank you. Great to see you, friends. I'll see you later at 2 p.m. Eastern.
I've never heard him cue the music that early. Or way late. Barbecue's coming down a little more here. Down 9.9. It's at 26.31. See if we get a double bottom. or further push. Maybe not him, but GameStop buying Overstock, right? I don't know if he's got that kind of cash or that access to capital. GameStop has mentioned they want to buy a used company. In their words, they actually have 1.4 billion, I think, in cash equivalents.
Core Personal Consumption Expenditures Price Index, a closely watched gauge of the Fed, rose less than expected in May. Now let's take a look at the four major indices, which are off at session highs, but still all deep in the green. The S&P 500 up 1%. The Dow Jones Industrial Average up over 200 points. The tech-heavy NASDAQ 100 up 1.4%, leading to the upside. And the small caps, the Russell 2000, up about 0.5% on the day. To help me break down this market action, let's bring in my co-host, Kevin Hinks, live from the TD Ameritrade Market Drive in beautiful Schaumburg, Illinois. Kev, how's it going?
Welcome to suburban Chicago, Tom, where we're at the TD Ameritrade Market Drive, an all-day free client education event. Tom, it's going great. We've been on stage all morning talking to clients about what they see in their portfolios and talking a lot about things like AI, Tom, and making comparisons to where AI is right now and let's say where streaming was 24 months ago. So we're giving clients.
Yeah, I mean, we heard last we heard their debt was 1.4 billion, right?
See their portfolios for the second half of the year. Having a lot of fun too, meeting a lot of clients.
Kev, when you look at this market action, we're wrapping up the end of the quarter here. The first half of the year, we've had some solid gains. S&P up 15%. NASDAQ 100 up, 38% so far this year. Do you expect this to continue? I mean, we got some decent inflation data this morning, but this has been a pretty solid rally, and it feels like there's more legs to this, or is it just maybe window dressing into the end of the quarter?
Well, you know, you could make a case that there's significant amount of things going on at the end of a quarter, Tom. I thought that the market might take positively to, a year-over-year core PCE that beat expectations. But Tom, if you look back 2 months, this is where core PCE was. So the fact that it's still 4.6%, the market may like it, Tom. I don't know if Jerome Powell does, though. I don't know if that dissuades him from further interest rate hikes, because I think that core PCE, that year-over-year data that he looks at so closely, it isn't coming down, Tom, as you know.
Yeah, it's been sticky, Kevin, and I think that's part of the issue. We've got a show that's based on travel and experiences, and that's what we're going to discuss today, and that's where a lot of the stickiness comes. People still want to get out there, go out to restaurants, travel, go on vacations, go on holidays, so that part of the sticky equation that the Fed just can't get rid of, with wages still rising and the job market pretty robust at this point. But when you look at an individual name here, Kevin, like Nike, it seems like, they missed on EPS for the first time in years. I mean, we haven't seen that out of Nike, and they didn't give like the brightest outlook either. What was your takeaway from the report?
Yeah, look, the question is it the U.S. consumer being weak, or is it their expenses and
Here's the last zip
their
pick from
wages
this morning.
that they have to
TPAT,
pay, and
TPET.
what's affecting their bottom line? Because you're right, they haven't missed on earnings in years and years. So for them to come in late. That being said, Tom, stock's down 2.5%. That's not a catastrophic
Might be getting a
move. But
bottom
the
here on
stock's
barbecue.
already been lower lately, as you know, Tom. So yeah, this is not probably the earnings event that fans of Nike were looking for, but this is still the gold standard in athletic apparel, Tom, as you know. So I would expect them to work through these problems. Yeah, this is certainly not what Nike was looking for in terms of an earnings event.
Yeah, it's kind of reflective of the consumer, but there's a lot going on in this report, whether it's inventory issues, sales over in China, which rebounded pretty strongly, but it almost is reflective of a consumer that's kind of waning as far as maybe the needs on that athletic wear and shoes also. So we'll continue to watch that play out. Analyst community is still kind of mixed on that one as they've been lowering price targets over the last month or so. Now let's bring in our next guest here, Kev, if we can. Nick Theodorakos, Financial Risk Management Director here. Oh, we do not have Nick. So, Kevin, I'm going to go back to you. When you look at that data,
Fridays are usually bullish
today,
on SPY.
a little
I'm pretty
bit
sure.
better than expected, but when you look at what's been going on
You're
in
gonna
the
trade
data
it
recently, Kevin,
bullish.
do you find this might be the bottom of that, as far as maybe softening inflation at this point? Because I think that's the concern. We've seen data that's just outperformed across the board recently.
Still have time. It's only 12.
Yeah, if you
Still have time
look
for it to
at the data,
rip
Tom,
also.
for this week, like durable goods,
Could just be a big flag now.
GDP, all the different data points that have come out, all of it's been strong, Tom. Housing is strong. What part of this U.S. economy right now is struggling? Because how do, like on a day like today, with the inflation data that we got, with the data that we've got throughout this week, yet yields are actually lower today. Now, they spiked yet yesterday, so a little bit of softening is not too surprising, but boy, I didn't see much in this. The year-over-year inflation data, because
Shouldn't have looked at those premiums tasty
is
this
coming
morning.
down, but the core, Tom,
Got you all hyped.
that ex-food and energy, that's the part that's really sticky. And that's the part Jerome Powell is.
Yeah,
really
you're in kind of a
Everyone
downward
can
channel,
look at
but
a one-year chart in crude oil, Tom, and know that they've come down from about $110 to where they are now.
it's just in a range, it's in a channel.
Just under $71.
Need to break the high of the day or
it's that other
bottom
thing.
of this flag.
It's those services ex housing, which is such a big wage component. It's the labor market.
Otherwise, you're just
that's
part of
really,
the crop.
coming in strong, Tom. And next
Data
week,
crop.
by the way, it's that labor market week. It's ADP, it's JOLTS, it's jobless claims, it's non-farm payrolls next Friday. So we have a lot to go through. We're going to get a real good picture of the labor market coming up, Tom.
Yeah, Kevin, and the other data point today, on the back of consumer confidence that we saw on Tuesday, that was explosive. We've got consumer sentiment, the final numbers for June print, 64.4. It's kind of reflective that everybody's kind of getting comfortable in this higher interest rate environment, and it's getting reflected in the data at this point. When you see numbers like this, right, and the Fed doesn't, I don't know if they necessarily want to see numbers like this. They don't want to see the S&P 500 and NASDAQ continue to rally as we're getting asset bubbles now.
Welcome,
They
Guts.
kind of want to see consumer sentiment
Thanks
fall
for,
a little bit, because
the
if
support.
the consumer's comfortable, Kevin, at this point,
Thanks
we're
for your
not gonna
likes
see
today,
inflation
guys.
come
We're
down
35
anytime
likes
soon,
on the
right?
day.
Because
12 o'clock.
now you have the wealth effect coming into play. When markets are going up, everybody's comfortable. Their 401ks are doing better. Home prices are up. So their biggest asset value is going up higher. So does that kind of hurt the Fed's play here?
Well, Tom, you and I have had this conversation ongoing for months, right? People get uncomfortable with interest rates, and then they get less uncomfortable. We were just talking about this on stage here at the Market Drive event. And so you're seeing the numbers in mortgage apps, and you're seeing housing, and the data from home builders. People still need housing, Tom. It's been 2008 since we've been behind in overall housing. So there's
Keenan.
demand for housing, and that part of the U.S. economy is staying strong, Tom. And when interest rates spike, which you can make a case they spiked a while ago. They're not spiking now, Tom. So we're going to need the yields to be significantly higher than this to start shaking the confidence of this market. Right now, with what the 4 indices are doing, this market's not feeling any pressure, Tom.
Not at all. I think we do have Nick now, Nick Theodorakis, to join us here, if he is available. Nick, I kind of wanted to get your take here on the markets and the rally that we've seen, potential window dressing here for the equity markets into the end of the quarter. We've had some robust gains for the S&P 500 and NASDAQ. What's your take here?
Guys, I thought that my spot here was canceled, given the fact we're up like this. There's no risk out there, I guess, right? So, no, like there's a lot of upside risk. I'll give you that, man. I think the strength of this rally has caught lots of folks, a bit off guard, and that's, I guess, the nature of the trading business. But I think the strength here is pretty phenomenal. You said window dressing, Tom. I think there is a big element to. There's a few elements here. One, definitely end of quarter, end of the first 6 months of the year. I think this is more of an institutional kind of day than it is a retail kind of day. And what I mean is that you're getting funds and mutual funds, hedge funds, registered investment advisors wanting to change the makeup of their portfolios going into the end of the quarter, so that they've got these big names on their quarterly statements, right? If you weren't in NVIDIA or Apple, you're maybe rotating in there to show that you're holding that. So there is definitely a bit of rollover that's happening in that space. There's also some interesting stuff, and there's some big index positions out there. There's some big SPX collars, and there's some big rolls that have to happen in the options market. And we've seen this before, but the options market can tend to push around the underlying a bit as well, based on what's trading out there. So I think there's a little bit of both of those going on. And then, right, you just have the sort of trend that's been going on and continuation of that based on, I think what is pretty good signs this morning from an economic data perspective for the markets. Again, I say this every time that the analysts get these numbers pretty much right. They're in line, right? We're not seeing a big change in the range of inflation. Yes, it's not coming down as quickly as the Chair Powell has expressed that he'd like to see it, but nothing that's in those numbers made anything volatility-wise pop, right? The VIX is, it hit a low at 1273 a couple of days ago. It's right at 13 now. I mean, you see just sort of known numbers coming out, and when there's no surprise, there's no surprise. And you couple that with the holiday weekend, and I think that the trend is the friend until today. I would caution Monday's a half day. I know we're going to talk more. Futures are open a little bit longer hours, but Monday could be a choppy day because you may see people rotating out of some of these names that they got into today. And on a shortened day, I think we could see a bit of an intraday vol pop, that day.
Yeah, to that point that Nick brought up here, Kevin, when you look at some of the window dressing, the gains that we've seen in June so far, if you take a look at a chart of Apple, I think it's reflective of the optimism here for equities right now. If you look at a 12-month forward-looking guidance as far as earnings goes for Apple, I mean, they're at the high end of their historical norm here, and that move right there is just parabolic. I don't look at Apple as the AI play, right? Are they doing things right? No, they're seeing softening revenue, but their valuation keeps going up, and the optimism for this company is just growing. It's $3 trillion market cap now. I mean, is that the the poster child for the rally that we've seen is Apple? And things aren't improving for them, but their stock still goes up.
Yeah, Apple looks like a chart of a biotech stock that just cured some disease, Tom. And you look at it, and there's no new products. Now, Apple does everything they do very well. Services continue to grow. The iPhone remains as popular as ever. Their wearables are doing well. Every high school child in this country has an iPad, right? So this company's never been more popular, Tom. But, and this is a big but, valuations look like they're getting stretched, Tom. I mean, that chart is a pretty spectacular looking chart from the beginning of the year at 124 to where they are now just below 193, Tom. But Tom, here's the thing. There's a lot of these stocks, right? The airlines have incredible looking charts. Obviously, the Magnificent Seven, those names have an incredible looking chart. It's starting to be a long list of charts that look like this, Tom.
Yeah, you throw an NVIDIA in there, and I don't call them Magnificent Seven. I call them the Elite Eight because everybody leaves Netflix out for some reason. That stock's been rallying like a monster, too, over the last 12 months. Guys, let's take a quick break here. When we come back, we're going to get into a discussion about the travel industry, the optimism there. We're going to talk Royal Caribbean Cruise Lines, which is at over 3-year highs this week. Stick around. Coming right back.
cruise line season. Every time they book a cruise and it keeps remaining popular, their balance sheets gets better, their free cash flow gets better, and these companies that spent basically 3 years in mothballs, Tom, they continue to get more and more healthy, as you know.
Yeah, Nick, when you look at this earnings growth rate last year, well, if you go year over year, it's whopping, right? Just because there was no real action in mid to early 2022. But earnings growth rate for next year is also supposed to be over 44% at this point. What's your take here on Royal Caribbean?
Well, there's real pricing power here, guys. I mean, the demand is so high. To your point, it was extremely uncommon. I had to check your stat there. This wasn't done. You booked rooms on cruises. You didn't overbook. It wasn't, they weren't playing the airline game, right? And there wasn't historically that demand, but the demand is so high, just for experiences in general. I think it's really fascinating. You guys, could have thrown Disney in here too, right? Not from stock performance, but look at the actual demand for the in-person park experiences, and their cruise division is booming. You can't get a seat on some of those, right? And Royal Caribbean is an interesting one. They own a number of brands, 4 or 5 different brands. They also operate some smaller cruises that do like river cruises and things like that, and so you get to your destination and then you can sort of add on additional experiences, and that's where the market's really hot right now, right? I mean, you look at the goods industries and just in general the PC markets. We've talked a lot of chips this week and stuff, and it's those sort of physical products aren't really booming. People bought everything they wanted for their homes and themselves during the pandemic. That cycle hasn't come back around yet. That stuff's still working good enough. And, I think there's a little bit of a FOMA thing here. And I don't mean just from a market perspective, but, if the recession's coming, if the world's going to get worse, if my student loan debt's not going to be forgiven, if all these things come to fruition, like, get out and go do some travel now, experience some things now. So I think the one derailer for me potentially is, how strong can demand remain if wages stabilize like the Fed wants, and we do get somewhat of a recession. It seems like a pretty obvious spot to pull back on some of these, now very, very expensive, experiences that are out there. And all these companies, airlines, cruises have done really well because they've been able to keep supply relatively low and increase prices. And if they come under pricing pressure because people can't afford it, that's going to change this dynamic. But I think, right now it's certainly no signs of slowing down.
Yeah, that and the price of oil hovering around $70 a barrel, but it's been coming down slowly. Remember, last June, crude oil was $120 a barrel. So fuel costs coming down, although employee costs are going up. Nick, you got an example trade for us here. Break it down for us. I think it leans a little bit bearish, but it's still neutral, right?
Yeah, it leans a little bearish. Sometimes, guys, we're talking, don't fight the trend. Sometimes we're sort of, a little contrarian. So this is pretty neutral. We're looking at the 108, 115 call spread paired up with the 197 put spread going out to July 21st. So, a couple of weeks on this trade. I tend to like to look at short premium trades, prior to, holiday weeks. Yes, probably some's already been taken out. Next week is almost, obviously markets are open. There's going to be movement, but, such a light week in terms of trading. I think yes, we can see some things get pushed around, but just in general, a summer kind of short, a short theta type trade here. So, I'm sorry, a short Vega trade here. So, just about a 6% range on either side of this. So you're giving yourself quite a bit of room. It's about a $2 credit right now. So that puts you basically at a maximum loss of $500 on the upside. So you got a $500 risk to the upside if it blows through that 115 strike. So, going through your short and your longs. Maximum, potential profitability is the $200, or the $2 you take in on the trade. And then you're right. If there is a bit of a pullback, only $100 in risk to the downside. They've gone really far, really fast. And, I think there's a chance to just stabilize here. And sideways is good for this trade, but I took a little more risk to the upside, just thinking it may be difficult, for these stocks in light trading to continue just to push to new highs.
Yeah, let's break this one down. Out in the July monthly cycle, an unbalanced short iron condor here, selling the 108 strike call, buying the 115 strike call. So a $7 wide short call vertical to the upside. And on the downside, selling the 100 put, buying the 97 put, short put vertical there, only $3 wide. Nick mentioned you got about $503 in risk to the upside if you collect about $1.97, nearly $2 on that one. On the downside, you've only got just over $100 in risk on this one. Break evens on this, just about 98 on the downside and about 110 on the upside on this one. Kev, your take on this unbalanced short iron condor over the next 3 weeks?
Yeah, this is a range-bound trade that Nick has, but he's leaning short.
Guts for the long term. Appreciate it, man.
Let's get nuts.
Let's get nuts. Thanks for dono.
It's just touching 80.
Been kind of quiet here, just
so, yeah,
working on some other stuff. But I am watching barbecue. Did bounce back up to VWAP on a double bottom there on the day. It is a Friday. See what happens end of day, and I think it is quad witching today. Right, everything's expiring.
That favors the stock, and of course, time favors this stock, Tom.
But thanks, guys. Appreciate it, man.
Positive time decay or theta on this one. You see those break evens. It's got more risk to the upside, but that's with the tint that, hey, Kevin mentioned the RSI. Anything above 70 is considered overbought. We all know it can stay overbought longer than you expect. But, Nick, when you look at something like this and time decay takes place, you basically just want to buy this at a cheaper spot than what you sold it and let time decay work in your favor.
Yeah, exactly. I mean, again, next week's not a throwaway week. Don't get me wrong. But, there's a day and a half of closure in there in addition to the weekend. Yeah, markets are efficient. That's already priced in. But if we do go sideways next week, right, just, theoretically, if that were to happen, you may be able to buy this back cheaper sooner. You don't have to wait through that July expiration. The other reason I took a kind of a two-sided approach here, I don't bring a ton of condors. We talk about them a lot, but these stocks have gone so far so fast. The upside skew, the call skew is pretty strong. So these vols are really flat. You look at the July monthly, it's about a 34 vol all the way up and down the chain. And you have to go way out of the money on the put side to see that skew really kick in. So, the calls are pretty consistently bid because it's gone so far. So you're getting a little more on the upside in terms of that premium that you're collecting. And you're right. You're just hoping time passes and there isn't a huge move. It can oscillate around, and if that happens, for a week or 10 days, you get sort of half of that time coming up. It's not going to collapse. You're not going to buy it back for a nickel, right? But if you get to buy it back 50, 70 cents cheaper than it is now soon, you may take some off. And leave some on if you think that trend is going to continue. And if there's some vol catalyst out there, you can take the whole thing off if that were to happen. To me, the risk here is to the upside, right? Greater risk to the upside. And if it explodes higher, right, that's the risk. But there's not that catalyst out there in this time frame. 1 week later, however, is earnings. So July 27th, I think, was the earnings date. So be careful not to go too far. And again, sort of historical bias here, but no, that's one reason we may not see a huge move prior to that because people are kind of waiting on the earnings.
Yep, you got some assignment risk on those short options into earnings over the next 3 weeks also. But good look at a neutral strategy there. Bias towards the downside in RCL after this monster move to the upside. All right, thanks to Nick Theodorakos, Financial Risk Management Director at TD Ameritrade, for joining us. But coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for discussion on Coinbase, which is up about 100% so far this year as Bitcoin surges, hit a one-year high earlier in the session before falling. Stick around.
There you have it. SPY back to the high. Big bull flag. Chop, chop, chop. chop. Might break out here though.
Has done, what the interest, the
Juan.
consumer purchase intent, and all that has done as Bitcoin has fallen, and now as it's kind of come back.
Oh, I got a haircut.
Doubled, so back up to 31 or 32 almost. When you look at the last quarter, we were very bullish on them, and they had we knew the quarter was going to be off, but I think what kind of gave us some confidence that it was going to be a positive earnings report was that the decline had stopped. And I think that Wall Street kind of expected the decline to continue. They usually do, but the decline, that green line had sort of leveled off and kind of bounced back a little bit. And we're really seeing how much it's tied to just the crypto markets in general. In fact, when you look at the number of people talking about investing in crypto or trading crypto, you kind of see the picture of what's happening. So there's less people interested in investing in cryptocurrencies right now than there were a year ago by about 14%. And I think that has a lot to do with the fact that it's not screaming at all-time highs. I mean, when it's at 68, 69,000 Bitcoin, that is, everybody's talking about it. You got to get in. It's so much FOMO, and everyone's jumping in and chasing money, and that's investing. But now, as it's going down, or as it was going down, now it's back up. trading is actually becoming more popular, which is obviously a good thing for Coinbase. So either one is good for them. They really just need more activity, more people coming into the market. But we can see just from just overall activity, even though on a year-over-year basis, purchase intent and website visits are down, which is completely expected. We're seeing that happiness is up significantly, about 9 points to 65%. So while fewer people are signing up, those that are with the service are happier. So we do like that. Obviously, they've got some headwinds. I mean, the SEC regulations, nobody likes to have a three-letter agency come into your business. So that's obviously going to be a negative. But I think this is going to trade with Bitcoin. And yes, there'll probably be some competition coming in, but so far they've separated themselves from the competition through sort of this, I guess, above board regulation type approach, whereas their
triple
competition
topping, but
obviously wasn't. So
still on a
I
horizontal
like them
channel
long
here.
term, and I just think that
I'd
I'm
add
very
to my
bullish
puts
on
if I could.
Bitcoin long term, and I know that since they're so tied together, I'm personally bullish on Coinbase, and our data is bullish on Coinbase because it's sort of the bleeding has stopped, and now we've stabilized, and we can see if we can get a little bit of run out of it here.
When the normal investor looks at Bitcoin or at Coinbase, are we getting this wrong? Are we in the early stages of this and we're looking at this like it had its pop and now it's down? Or is this just a first or second inning in cryptocurrency that's destined to gain momentum, and therefore, Coinbase will gain momentum along with that? How does like Folio see the whole Bitcoin cryptocurrency thing?
Sure. So, I mean, if you're asking like Folio's opinion, it's got to be based on data. That's, consumer sentiment, web visits, things like that, app volume. And I could say that generally it's positive. I mean, it ebbs and flows with the price of Bitcoin. So it's a pretty fickle market. Personally, I think that we're second or third inning on Bitcoin. I think that, when Bitcoin was in the $100, $200 range, that was like the pregame warm-up, and it was nothing now. But now it actually has some utility, and I think it's going to gain utility over the next few years. And I think that every crisis of government or crisis of currency is a use case for Bitcoin. And there's really no way, I don't think, for the governments to stop it unless they shut down the internet. So I'm pretty bullish on Bitcoin long term, and I think one day we'll look back and 31,000 will seem extremely cheap.
Now, let's go on the other side of that, Landon. I know there's the correlation between Coinbase stock and cryptocurrency, but as competition comes in, remember the fees using Coinbase are astronomical in our industry at this point. So those are going to come down, and that's the concern I have, that disconnect. Are people, like, according to your data, still bullish on Coinbase or just Bitcoin in general, and Coinbase is just riding the coattails at this point, but they're eventually going to fall off?
Right. So I think that it's a little bit of riding the coattails and eventually they'll fall off. I mean, if you think about it, the fees that you have to pay to buy Bitcoin are, like you said, extremely high compared to a stock, right? You can go on tdameritrade.com and buy a stock for $0. You can't do that. It's nowhere near. I mean, it's very expensive on Coinbase to buy Bitcoin. And as competition comes in, those numbers are going to go down very quickly, but it has to be competent competition where the market has very high levels of confidence in the company. So that may take a little while. And until then, they're going to be raking it in. And don't forget, they have the ability to innovate and come up with something new. So it's not just trading fees. So right now, that's the bulk of their revenue. And of course, the fees are really high right now. And in 5 years from now, they're going to be much lower. They just have to be. But they're gaining loyalty. They're gaining a loyal consumer base where they could innovate and come up with new products, and then they could have a completely new revenue stream. So I like that they're sort of the leaders right now, first to market, if you will, even though it's not exactly first to market, but they're the ones that are winning right now very clearly. So they've got a good lead. You got to have a little bit of confidence in their ability to execute and innovate. But I don't think that the race to zero on commissions is next year. I think it's probably 4 or 5 years from now.
All right, great stuff, great data as always, Landon. Appreciate it. Have a great weekend, buddy.
Thanks, guys. If I don't
Maybe
see
save
you,
it for
happy
anyone that buys
Independence
baby.
Day.
You too. All right, that's Landon Swan, co-founder.
Stop looking at me,
Portfolio,
Swan.
breaking down the data for us. Kev, I wanted to get your take here on Coinbase. It's like that train. It can't stop when you see Bitcoin at one-year highs, even though we're seeing a little bit of a pullback in Bitcoin today.
Yeah, it's had quite a run.
Well, what am I looking
if you
at?
Look at this chart. The move it's made from, the
Why does mine show it's up?
right just below $50 up to $70.
Why is Bitcoin Cash?
That's a big move in a name like this. That's
Why is this on my list?
40% that this stock has moved. It was touching overbought. Now it's slightly off. It's a 65 on the overbought scale and coming down today, obviously. So, Tom, I just think this stock, I think competition is a problem.
You put a
for
price
it.
on it? Is Teladoc
I think,
moving?
It's going to be tied to Bitcoin going up or down. So whatever your opinion is on
Look at
Bitcoin
that.
or cryptocurrencies,
The-
you could probably correlate that
It's
to
the
your views on Coinbase. But Tom, here's what I did.
It's the
Just
SOP
because of how
for
far this stock is
for
run,
OWL.
I did something relatively short term. I bought the July 21st and sold the July
chart.
7th 65 put calendar, Tom. I paid right around $2, $1.95 for that spread, Tom. I'm collecting some money. It's about short 7.5 deltas, Tom, and it's, like I said, not a very long duration. It's got earnings the first week in August, so you're ahead of that. And this is just a short-term bearish play in Coinbase, watching Bitcoin that looks like it's peaked out for now. If it continues lower, I think Coinbase will follow.
Yeah, let's break this one down. Buying the July 21st, the monthly cycle that expires in 3 weeks. Buying that 65 put, selling the July 7th weekly 65 same strike put. Paying roughly about a $2 debit for that. That's going to be your risk, $200 per spread. But you see the break evens there, about $60.50 and just under $71. So while Kevin picks the 65 strike as the apex, right, where you think it's going to go over the next 3 weeks, you've still got a nice wide range for this stock to trade in, about a $10 range, where you can still remain profitable. Kev, and this is one of those trades where if the stock starts moving down, implied volatility, comes back a little bit, that's also going to expand the price, right?
Right. Exactly right. One thing about a put calendar is you get the double whammy every now and then because you get directional move and you get the move in implied volatility. You're long about just under 3 Vega, Tom. So if that implied vol starts to pick up, and you can see the chart of the implied vol, it's at, at least 12-month lows on this chart, implied volatility. So yeah, you're actually buying volatility relatively inexpensive to where it's been all year. So yeah, you can get the double winner there of not only directional, because it's short about between 7 and 8 deltas, but you also get the implied volatility bump.
You do have that ability to roll that short option as you get closer to expiration in 7 days if the market's open, liquidity is provided, and you do have some assignment risk on that short 65 put into over the next week also. But good look at slightly bearish put calendar here to the downside, and the debit that you pay is the risk. All right, Kev, coming up after the break, we're going to take a look at United Airlines, which is near 2-year highs. It's up over 40% so far this year. Soaring, flying high. Fast Markets coming right back.
They're not trading Archer. Come on. They're trying to get you to trade. They don't care if what. More legs, the better. The more often, the better. There you go. Spies pushing through.
Well, Fidelity, BlackRock, that the filings aren't sufficiently clear and comprehensive. Sources telling the Journal. Now, keep in mind, this comes after the SEC filing suits against Coinbase and two of the largest exchanges, crypto exchanges. So this is interesting because there was a lot of talk about how these ETFs would bring legitimacy, right? Ultimately, we saw the lift, the New Year highs I mentioned, 31,700. But you can see how there's still a lot of answers to be figured out here in this instance. And again, right back off those highs for the year. I did notice a big move up in gold right around the same time that Bitcoin was breaking down. It spiked from, I think it was 1912 up to 1928. So yeah, keeping an eye on some of this movement, some of this intraday volatility here, Tom. Seems to be tied to the SEC Wall Street Journal report, though.
Yeah, gold bouncing off those 3-month lows with that dollar lower after that data came out on inflation. The dollar turned around because it was higher in the pre-market. All right, thanks to Ben Lichtenstein, hosted the Future Show here, breaking down markets for us. But now, Kev, let's take a look at United Airlines. It's a travel theme today. Stocks up over, 44% so far this year. We just saw the news when we traded Delta Airlines earlier in the week. Now we're looking at United. A bunch of flight cancellations. CEO battling with the FAA right now due to some weather issues, smoke, smog, canceling flights before they needed to be canceled. But what's your take here? It seems like this one's on soaring to levels that we haven't seen in 2 years.
Yeah, the good news is for the airlines right now, Tom, is demand is there. Now, they've got to manage this demand, manage your staff, manage your planes, you can't manage the weather, Tom. There's not much you can do about cancellations because of weather. But if you're canceling them for other reasons, that's a different problem, right? You saw the problems that Southwest had at the end of last year. Those were catastrophic issues. Now, I'm not saying United has those, but they're still working through some logistics issues as they get there. So the stock's doing extremely well. It's backed off slightly this week, Tom, last few days, but up today about 1.3% on news that, let's face it, Tom, travel isn't going anywhere. The U.S. consumer has been cooped up from traveling for a couple of years, and they are showing no signs of weakening.
Yeah, fell from earlier week lows that we saw on Wednesday, near $57 a share. But look at that. All the airlines continue to trade in the green. And the analyst community coming out pounding the table that they don't see any softening in demand at all through the end of 2023. And I think you've heard that from some commentary from the CEOs. So, Kev, with the stock trading up at 57 earlier this week, I looked at a strategy here that's going to take advantage of maybe this pullback that we've seen in the last couple of days, even though it's up today, where you're using that lower implied volatility in this name as the stock's risen, implied volatility at or near 52-week lows, taking a directional bias here where I'm going to buy something in the money out in the September or the August cycle. So giving myself a couple months until expiration, buy the 52.5 strike call, and then selling against that to offset some of the costs on that bullish call purchase, sell the 60 strike call. So it's a $7.50 wide bullish call vertical to the upside, where you're paying roughly, we've got about a $2.90 debit on the risk profile. It's probably trading closer to $3.10 because the stock continues to move higher. But the debit that you pay is the risk on this trade, Kevin, that can expand to $7.50. So you got a decent risk reward setup on this one. Kevin, give me your take here on this bullish call vertical to the upside, but giving yourself some duration.
49 days, Tom, that you've got for this trade to work. And if it moves between here and $60, and if you look at United Airlines chart, it's been as high as 56, almost $57, Tom. But if you widen out, this stock's been over 60 if you look at a 3-year chart. So you're taking a bullish play on United Airlines here. You're thinking that their earnings, remember Delta's earnings, they guided this week, strong earnings. Delta's chart looks incredibly strong. United Airlines following that. We're looking for some news for them. Like I said, the news headlines this week aren't great, Tom, but overall, the demand is there for these airlines. This is a bullish play on Delta Airlines. The risk is what you pay for it. Currently, right now, about $3.10.
Yeah, and they report earnings on the 19th here, Kevin, of July, and we saw what happened when Delta, came out and upped their guidance. I think a lot of traders looking for that. But you did mention, you don't need this stock to kind of explode up to $65, $70 a share. Your goal here over the next 49 days is to go up to at or near the 60 level, Kev. So tempering expectations while still taking a bullish look isn't a bad play when the stocks run this far, right, Kev?
Yeah, exactly right. Remember, you're only spending a little over $300 for this chance, and that gives you right now almost 40 deltas, Tom, on this spread. Why? Because you're buying it in the money, selling it out of the money. It really resembles a covered call, except you're not using stock and you're using a call against a call. So much better use of your
7.5 your
capital,
portfolio.
Tom. But like I said, you do need the stock to move slightly higher from here to be profitable. But a relatively low-priced call vertical.
Yep. Break even about 55.50 on that one. All right, Kev, that's going to do it for us today here on Fast Market, but stick around right here on the TD Ameritrade Network. Next Gen Investing is coming up with host today, Ben Lichtenstein, and Renita Young taking the place of Jenny and Alex.
Lichtenstein? New high of the day on SPY. So it didn't necessarily chop today. Rallied, consolidated, and rallying some more. So RSI was so high and weird this morning. The divergence for now. But bulls are definitely still in control. I like those shrinking hoses. Cool. Oh, GNRC is still going. 3% on. Oh, look at that. It's at 150, man. Can't always go full chub. Can always be a shower, not a grower. Look at that. 152 hit the high. Peloton's up 3.5 now. SPY still climbing up. Might be a 2% day on SPY. Give everyone good warm feelings inside coming into Independence Day.
Again to the high around 193 this year. When you look at it from 124, basically added $70 to a new all-time high, as mentioned, up and through that January high from last year. Again, the $3 trillion market cap attracting a lot of attention, but I noticed last of the 16 weeks, Apple's been down only 2 times and down only 5 weeks this year, holding above the 50, above the 200-day moving average since the end of January. Well, I should say the 50 since January, the 200 since March. But yeah, a lot of spending going on out there, it seems like, and a lot of people buying Apple products. We're going to upvote Apple, and we'll continue our discussions here. We're going to bring in Rick Ducat in just a couple minutes. He's going to chart it and trade it. But Renita, I wanted to take a look at NVIDIA as well, a name that, well, it's actually going to be our downvote here today. But I saw this week from
Is it NVIDIA?
Down from 430, I should say. They traded down to around 396, back up to 425 today, but not necessarily seeing some of the strength that we were just talking about in terms of Apple.
Not necessarily, but it's still the strongest performer in the S&P 500 this year, and it's up around 188% year to date. That's still pretty strong position that it's in, and Daiwa upgraded it to an outperform, and we can thank, of course, the AI wave for boosting NVIDIA during this year. But analysts question whether its growth can truly support this high stock price. And the company, however, says that it expects sales for the current quarter to grow about 50% from last quarter. And seeing that upgrade at Daiwa to an outperform, they also raised the price target to $475 a share from $408. That's around a 13% move to the upside from where it's trading today.
Yeah, you know, I think that's a good point, Renita. I didn't mean to give the wrong impression. This stock has been, well, Houston, we have liftoff, to say the least. I mean, this month from C373 up to 439, that's the year high. This year we saw them basically triple in price here. We're talking from 150 up to 439, basically, again, tied to AI. This tech's been hot in general in terms of fueling this move, and obviously chip demand has helped as well. Now, NVIDIA is one of our down votes here today. We're going to kind of push that one back for further discussions here. We'll take a look at it at a later time. But Renita, I wanted to move forward with our next stock today. That's Alphabet Google. And as I take a look here, this is a stock that's, well, from 116 up to 121 this week. It's also been enjoying some of the gains as investors have been focusing on the positive again and kind of discounting the negative.
They have, and today is all about ad blocking. So we did see a note out claiming that Google, or Alphabet, I should say, Alphabet's YouTube has been running global tests to deter people from blocking ads. And ad blockers, they violate the company's terms of service. So they're urging users to disable them or switch to YouTube Premium for an ad-free experience. Of course, this will be tied to another service that the company provides, right? But YouTube said that it'll notify impacted users through the repeated notifications if they continue to block the ads, and they'll ask them to allow ads on the video platform. And in extreme cases where people continue to use ad blockers, the company is going to discontinue their usage. They will temporarily disable video playback. But reports say Google's planning this as a sort of a 3 strikes policy. 3 strikes and you're out, and you'll be disabled or you won't be able to see your video for a little bit of time. But YouTube said it'll only disable playback if users continue to ignore those requests. So year to date, however, the stock is still pretty strong. It's up around 36%. We know that it's seen some AI leverage. It's seen some different tools, possibly with its cloud service gaining a little bit more closer toward the middle of the year than it did in the beginning of the year. But we'll find out a little bit more. What do you think?
Yeah, I think, excuse me, there were some concerns headed into earnings about how shares of Google and some of these big tech names would fare with the ad spending revenue declines anticipated, but for the most part, it's done well this year, from $85 up to $129. We saw that on June 7th. Now, we did pull back. We recently tested the 50-day moving average. We held above it. That was Monday. Last time shares of Google, Renita, were below the 50. That was back in the beginning of March. We've been above the 200-day moving average since April. And again, this is just one of those names where I thought it seemed to be kind of that gloom and doom scenario that we had anticipated. I mean, I think back to like the likes of Jamie Dimon that was, predicting this perfect storm, right? I think it was he called for. And again, these worst case scenarios being dialed back. I think price is a reflection of that.
Absolutely.
Okay, let's move on. Last but not least, we've got Netflix on our radar today. We think you should be keeping an eye on shares of NFLX. Renita, this week from 411 up to 444. This one's been gaining along with the broader market. Talk to us about what's going on with the fundamentals.
Well, yesterday, Netflix got a positive catalyst watch from Citi, which also raised its price target to $500 a share from $400 a share. That's around a 14% move to the upside from where it's been trading today. And Citi also chose to keep a buy rating. But they think Netflix is going to offer some encouraging news on its ad-supported subscription tier soon. And it's been now 2 full quarters since the company started launching that ad-supported subscription tier. But at the same time, the analyst over at Citi says that the June quarter results, they may benefit from the early stages of its crackdown on password sharing in the United States. As we know, it pushed out a global view of other countries earlier, and it just made its way to the United States after pushing that date back a couple of times. But the analyst is taking a more bullish view on his estimates for this company. He's forecasting 82 million new subscribers and $10.6 billion in annual revenue, extra annual revenue off of these changes. That's up from his previous views that he had there. And so the logic is that Netflix will tend to generate more revenue from its new subscribers if they allow people to choose between that ad-supported plan, between the standard plan without the option of the basic plan. So giving people options, they say, is going to be able to help them out.
Yeah, it blows my mind, Renita, that we're still talking about this subscription crackdown. It just seems like they should be able to flip a switch and remedy the situation, yet it's been a while now that we've been hearing about this. I mentioned the rally this week, 411 up to 444, but this month, a big month for shares holders of Netflix, from 390 up to 448. This year, We started out just around 298, just below 300, I think it was. Rallied all the way up again to just shy of 450 a couple weeks ago. I remember Netflix kind of chopping for a period of time around the 50, around the end of February to beginning of May, basically 3-4 month period that we saw not a lot of conviction, but after rallying up and through 370, it has yet to look back. We're above the 50, we're above the 200-day moving average, and I do want to point out, though, still holding well below that all-time high we saw back around 700. That was in November of 2021. So this is a good look at 4 names that we're watching today as we head into the middle of the trading day, into the end of the week, the end of the month, and end of the quarter. But we're going to go ahead and upvote Apple. We're going to upvote Netflix, and this is not a buy recommendation by any means or a sell recommendation for that matter. Just we want to further discussions and our look at these 2 names because they're intriguing and providing a lot of incentive to kind of continue the discussion here. Talk to us a little bit, Renita, about these last 2 names as we head into break and as we call them out as our upvotes today.
Well, one more thing that this analyst at Citi said about Netflix that gives it a boost over its peers is the fact that there's a writer's strike still going on in Hollywood.
Okay, I remember
that impacts the
Peloton
production
up almost
of all
5.
of the things happening in Hollywood. But Netflix has this huge international database of work that people can pull from.
Okay, stick around. That's Renita. And I, myself, Ben Lichtenstein. We're going to be back in just a couple minutes with more next-gen investing. A look at our upvotes, Apple and Netflix.
Runs up 2%. Not sure on this chart with run. I still like it, just taking a while to go. Stay safe, kind of showing support still from the bounce 3 days ago. 9.5. Same with Dish. Dish is down 0.5%. GME is flat today. Barbecue, we're down 7.25, 27.09. RNT up 2.9. Base is down 8%. Might be a fun one for some cash secured puts. Hi, just consolidating up here. Shop master.
I chose to include standard deviation channels on our chart today, and this is a study that can be helpful when a stock is making new highs or lows and we don't have much previous price action to go on. We take a linear regression line, our blue line here, a line of best fit based on closing prices, then extrapolate standard deviations to the upside and the downside. You can see we just blazed through the +1 channel here. That was this yellow line. So the +2 channel comes in right about here, this orange line, near the 197 level or so, just below 197. That could be a point to start looking for some consolidation or at least a pause in what's been a very strong uptrend so far. And, you know, we could keep going through it as well. It's not a stone wall that we're going to break against once we hit it. It's just a source of possible resistance to be on the lookout for, and a name that's showing remarkable strength.
That is quite a view that it almost you said defies analysis.
That was a little extreme of a statement, but you know.
That's okay, but for this analysis defying chart, why don't we bring in Ben for an example trade?
Well, you know, Rick, that fits right in with what I've been talking about in terms of this market, which in many ways has been defying gravity, right? I mean, look at some of the run-ups.
Could be set up a head and shoulders here at the top.
Rate environment, it just doesn't really.
This might not play out today, though. It's already won.
Talk to us about the trade that you have your eye on here in terms of Apple.
Thinking behind the example trade that we put together today. Just because something is high doesn't mean it can't keep going higher. And we chose to do a call calendar today, a long call calendar, +1.
How true that is.
July 7th, 197.5 call calendar for a $1 debit. So we zeroed in on this +2 standard deviation channel. That's the site where, if you recall, I might have said that we could see some kind of pause or a brief stall in trend here. So our read on the chart is what's kind of helping us pick our strike price today. Ideally, we would want the stock's volatility to eventually increase, but not go below our short-term strike in that time period here. So our best case scenario would be our short option expires worthless, then price rises above our strike, and we basically got a long call at a discount because our short call defrayed the cost. We've got 21 days till the long call expires here. I have a total risk of only $100. We're still risk defined on this trade, which is nice. And if after our short strike expires and we're left with that long call, we could have potentially unlimited profit there. So, you know, worst case scenario, we lose $100 if things really go against us here. But basically, this trade is looking for Apple to keep rising and keep forming new highs.
All right, we'll continue to watch Apple, the run-up we've seen, and how it's really been fueling this broader market higher. That's only one name on our list here, though, Renita. We also have Netflix, which is our second upvote here today.
Yes, which got all the feels from Citibank in that positive catalyst watch and that new price target of $500. But Rick, walk us through what the charts look like.
Well, this one's even stronger than the last one we looked at. We're up about 160% off our yearly lows here, basically just straight up and to the right. It's quite a name to been involved with here. If you were a bull, it was quite a wild ride here, and it still seems like it could keep going on for a little bit. You know, we had this price action mostly contained within an upward channel here between these two purple dashed lines. We had some upside excursions here and here as well. We dipped back below into the pattern very briefly. We touched on our yellow 21-day EMA, as well as this small gap that was formed here around the 409 level. Then we made our way back above that channel once again. So this one, in the short term at least, I am kind of questioning how much gas is left in the tank. We've had such a strong move for so long here, and we are looking at the RSI indicator now, our measure of momentum. We crossed below the overbought area. That's the 70 threshold, and we haven't made our way above our old highs yet as well in terms of price. So we haven't taken out the highs, and we're below the overbought area on the RSI. So those two things make me think maybe we're in for a bit of a pause, maybe a little bit of consolidation around this area. We are seeing volume nodes at these elevated levels, which suggests price acceptance. So we could perhaps bounce around between 409 and where we topped out around 448 for a little bit here. We also have our moving averages to consider. Everything's still trending upward pretty strongly. I took our two longer term moving averages off the chart here because they had just been left in the dust by this long-term strong move here. But, just trust me, they're still trending upward. They're still diverging farther apart from each other, which suggests the trend could still be strengthening. But like I said, momentum kind of trailing off a little bit here, and since we're not making those new yearly highs, we could be in for a little bit of a slowdown here. Look for resistance at 448, and above that, our +1 standard deviation channel near 461. To the downside, watch our trend lines, and then our 21-day EMA near 416. And then finally, our last kind of line in the sand for this uptrend would be the 409 level.
Very interesting that it could be some consolidation. So walk us through an example trade, taking that into consideration.
Well, like I said, my overall read on this chart is that it's been an amazing run, but maybe a little bit of slowdown coming. That being said, I didn't feel comfortable enough doing a bearish example trade, so I did a neutral to bullish trade. We sold a -1 July 21st 410/407.50 put vertical at a 70-cent credit. So once again, 21 days to expiration here. Our break even comes in right around that 409 level that I highlighted, our green dashed line on our previous chart that was the site of that gap. So basically we're just looking for price to stay above that level. I thought that seemed like a reasonable place to pick a strike. We've got several sources of support before we hit that point, and that would be one area where we would be thinking we could see a final strong source of support there. So that 409 level seemed important to me. Once again, risk defined. It gives us a bit of safety if it goes against us. Our max loss would be $180.
We'll be thinking about the market. It'll be
roughly 2.5 to
on
1.
and full weekend.
Especially consider that
Independence
the outlook
Day
on this trade
weekend
is that it's pretty likely to succeed based on the expected move. Once you look at our risk profile here, you can see the shaded area on the risk profile mostly comes in the positive part of the graph here, a little bit in the negative area.
25 more days.
Loss here. And this is based on the expected move in the options chain. So it seems like the odds would be in our favor on this one. So really more of a softer target here, just looking for price to stay above that 409 level.
Rick, thank you so much for walking us through the charts and those example trades. We're going to take a quick break, but coming up next, we have Tesla for our FOMO segment.
Tesla. Oh, we literally hit the same high to the 10th. 443.61. 443.61. Wow. That'd be crazy if that high holds. They gotta want to push it just a little above there. At any rate, though, we do have a cup here. It's crazy. So. Street shift is down.
But this is
And
a massive retailer, and oftentimes I think it's forgotten because it's more concentrated outside of urban areas. But with that sizable footprint, any way to reduce the amount of employees and reduce, the amount to staff some of these stores, I think is seen as a huge win.
You know, Jenny, this is such an interesting story, I think. For one, because we've been talking about the broader market throughout the show, the strength we've seen there, and Dollar General definitely has not participated to the same extent that some of these other names that we've been watching have. And I think you can chalk it up to what we were really kind of tying this rally to is the fact that concerns about recession have been pushed back, and Dollar General is going to be one of the beneficiaries thereof, right? If people had less money to spend, they'd be in Dollar General more. But this story kind of blows my mind, this checkout story, because you and I joke about stuff like this all the time, and we were discussing earlier in the show why Netflix is having such an issue shoring up that user, that subscription-based strategy that they have to try and get some of the duplicate logins back to individual subscriptions. But I mean, I'm wondering every day that I'm in a store, why are we not to the point where we can move away from these barcodes and finally just walk in and out without ever talking to a clerk or checking out or exchanging cash for that matter?
No kidding, Ben. I recently went to Ace Hardware, which I know is me like being in 1995, but I recently went to Ace Hardware. They have no self-checkout. The checkout option had a line wrapped around the store, and it's like, how are you not operating in self-checkout? It is 2023, get with the times. So I definitely see this at least as a way for Dollar General to test the foray into a world that we are already operating in. I mean, this technology already exists. We use it every single day at Amazon Go. However, I just think this name needs to find that edge because, like you said, not caught up in the broader rally, not even comparable to Dollar Tree anymore on a year-to-date basis at least. And the street definitely feels a little bit more mixed on this name. We do currently have 16 buy-leaning ratings, 13 holds, so we definitely skew more bullish. There are no sells on Dollar Tree currently, or Dollar General, currently. But another thing I will say is there's this thinking that with these discount retailers that they would be the beneficiaries of course, a recession. But what recession? I mean, I think we're seeing frothiness come back into this market. I think we're seeing the fact that a lot of these names that were supposedly underperforming this year doing quite well. So perhaps with the lapse of any sort of economic concern, maybe we could see names like this not necessarily seek the same need they once were.
You know what, Jenny, on your note about people assuming that dollar stores will do well in recessionary periods, let's say that there may be a downturn and Dollar General doesn't look too well positioned because it is down on the year by a pretty huge measure. But any thoughts about that, just about the difference between the dollar stores as the beneficiaries of a recession?
Right. So what's interesting is Dollar General has never been the true dollar store. We used to joke they were the fake dollar store because they haven't had prices that were around $1 in years and years and years. Although Dollar Tree now does have $1.25 as their base point. They actually announced a story earlier today, they will begin offering some of their grocery availabilities starting at $5. So even Dollar Tree is moving away from that true $1 model. So the dollar store concept with inflation is going away. However, with looking at these names and the way they would perform in a recession and in an economic downturn, I think if you've looked at the dollar stores, you've been fairly disappointed. The same exact situation goes for the consumer staples, which if you look at names like Kellogg's, names like, Procter & Gamble, some of these true staple stocks have also seen the same degree of disappointment. And I think it's because there was so much attention on the fact that we were going to be in this great recession that isn't actually coming to the same fruition that many people have thought. So staples have been disappointing. The discount retailers, I put them sort of in the same bucket. But then again, it's hard to explain names like Ross stores or even Dollar Tree that have performed quite well on the year. Dollar General right now, I think, has to figure out the margin story because their goods aren't $1, their margins look concerned, and they also have people shifting away from some of their more expensive, obviously relatively speaking, products, and they're trying to offer now fresh food offerings. So they've got to figure out, I think they have a bit of an identity crisis, frankly.
Identity crisis. That's a good way to describe it. JD, thank you so much for the brilliant breakdown. Now let's bring back in Ben for our FOMO segment. We are looking at Tesla right now, which we learned today has a little bit more competition for its SUV, right? But it's poised to report some record second quarter vehicle deliveries. It's going to report in the first few days of July. So we could hear this report sometime over the weekend. And analysts are kind of split on what the response might be like because of the huge run up that this stock has had this year already.
Yeah, maybe a little bit concerned that we could see buy, rumor, sell fact into this one, but there's a lot going on recently, it seems like, Renita, surrounding shares of Tesla, the recent run-up that we've seen. Here you can see some of the deliveries by quarter, and well, we're going back to the first quarter of 22 as we rate the results. But I went ahead and looked at the charts as we were getting ready for this story. I saw this week, along with the broader market, a significant run-up in shares of TSLA from 238 up to 264. This month, Renita, from 200 up to 279. And if you remember, we started off the year down around 101, again up to, well, near 280 as mentioned. But the end of May, beginning of June, Tesla traded back above the 200-day moving average for the first time since November. That move up came with conviction. That level is now an area of support to keep an eye on. And Tesla, if you remember that all-time high of 414 from November of last year, that's the next big hurdle for the bulls. The next big technical hurdle, that is, well, that's going to be September highs that we saw last year ultimately as well before we target that all-time high. But currently trading around 263, that hurdle I mentioned, that September last year high is up around 325, down only 1 week out of the last 7. And as I look here, well, currently balancing around this 255 area on the bigger picture here. But definitely one to keep an eye on. And then the other thing I keep thinking about, Renita, is, Tesla took a hit, if you remember, down to that 100 level into the end of last year amidst concerns about Elon Musk and that kind of focus being sort of spread out over Twitter and some of the other areas and businesses that he's at the helm of. But, this whole cage match has me a little bit concerned in terms of what's to come. I mean, how do shareholders feel about the possibility of, Elon Musk, not necessarily, they say 2 men enter, 1 man leaves, right?
Well, Elon Musk, he's got a lot to consider because Mark Zuckerberg is a martial artist.
Absolutely.
So why would you do that? Elon Musk says that the most exercise.
Look at that candle and SPY.
Kids.
Glorious.
So you may want to get a trainer for this.
I thought about closing my
Well,
shorts here and
let's bring in
flipping
Rick
too.
for an example trade at
I
the
knew
stock
better, that
that's
slow,
more than doubled
just
this year,
controlled
up around 113%.
selling
Every
there
day.
was
Rick,
not
walk us through an example
reversal.
Yeah, sure. I mean, I prepared a little quick chart here just to kind of provide the basics.
It just was
for
stubborn and
my
wanted to
trade
hold
here.
through
And,
it all.
Tesla's been
I could have
trending upward for
probably
a while. This is
reversed
the
my
kind of
losses
name
with
where
this
it hasn't
move.
really paid off to bet against them for quite a while here. Upward channel, moving averages all trending up. We're breaking above a potential source of resistance this morning from a gap near the 262 level, as well as a volume node. RSI, our measure of momentum, fallen off a bit, but still rather high and bullish. But what I'm really looking at is the triple top near 315 that was the site of our yearly highs here. So what I thought about doing today was buying a call butterfly. So you buy one August 18th 315 call, you sell two August 18th 325 calls, and then you buy one August 18th 330 calls. So you only pay a debit of 75 cents for this one, gives you a break even of 315.75. And Tesla can be a little harder for retail traders to work with sometimes because the premiums on the options are so rich and so expensive. I mean, buying a call at this level, this 315 level, would have run you over $600 just to buy an outright call there. So looking at this trade, this one's nice because we pay far, far less and we still get some upside exposure here. Our max profit would be right at that 325 level or so. As soon as we get above 315, if we were to break above our yearly highs near 315, that's where we'd start making some money. We would top out at 925 if we were to close right on our 325 short strike there. But probably a more likely scenario, given that that's such a narrow window, would be if it goes above that area, we would cap out around 425. That's that horizontal area on the right side of our risk profile there. So once again, risk defined. It would be a nice little payday if it were to play out for us here. But, you know, that's what I put together for an example trade on this one.
All right, we'll keep an eye on the call butterfly. Thanking Rick Ducat with the Tesla trade today, and a look at some charts here. The chart master. And while we're going to take a quick break, when we come back, stick around, more next gen. We're going to take a look at Live Nation, some of the price activity we're seeing behind, well, the move up we're seeing in LYV. Tom White joins us for that discussion. Next gen, back after this.
Not necessarily a big sell-off. 3130. We have made shoulder and head though, so that could play out, but might not today. Consider me Miles Davis. I haven't really, no. Supply and demand zones, yeah, I mean that's basically support and resistances, right? Where you can see liquidity being built. I haven't specifically researched those and implemented those though. From what I understand, that's more or less the same. Oh no, space. Oh, that news already came out? Is that old, you're saying? 400 million? Oh yeah, that was yesterday. Yeah, it's not a profitable business. They have to keep raising money. I mean, the money they have right now is just mostly from deposits. The revenue. I guess they're non-refundable, or they wouldn't be able to count that as revenue. They have some other revenue I don't know about. But now they've been on a flight, so we'll see. Older news kicked in. Yeah, we saw it yesterday. Maybe just kind of recirculating. Um, 1.1 billion market cap. Last quarter they did 392,000. Operating income is negative 163 million. Oh yeah, they're gonna keep offering shares until it works or until they go BK. Yeah, it's pretty bad.
The ticket, a lot of times you're going to pay a higher fee price on that. They did have a pretty good quarter last quarter. Sold $72.6 million in fee-bearing tickets. That's up 41% from year earlier periods where only about half of their venues were open. Company stated they've already sold more than 90 million tickets, up about 20% year over year. And they emphasized one of the revenue streams that I think a lot of people overlook in this particular company is the fact that they have sponsorship and advertising business. That came in revenue of $170 million. That's up 47% from $115 million that they reported in the previous year. So that might be the outlier for this this company moving forward, is if they can get more ad dollars, slap some more sponsorships on not only the tickets that they have, but on their website and their multiple venues that they run their concerts through.
Tom, you know, I hear what you're saying, and I'm familiar with the situation, right? It's a bit staggering when you go ahead and purchase your tickets online, and then you see the fees, as you pointed out, oftentimes added on right at the end. After spending the time to do so, you're kind of like scratching your head and wondering, should you continue? Obviously, we do, otherwise they wouldn't be doing so well. But 30%, I mean, before taxes, after tax, you're talking about 40%, you know, almost 50% of the ticket price. That's just staggering. But it seems like with this focus on services and the trends that we've seen there after the pandemic, again, is a company that's done well. I was looking at price activity this week from 87 to 91, this month from 79 to 91. You mentioned a 12% gain this month, I think it was. This year, Tom, from 68 up to 91. Since the end of April, down only 2 weeks. We're talking up up 8 or 9 weeks. So down only 2 out of 11. But I did notice they formed a bit of a double bottom March of last year, or Nova of last year, March of this year around 65, and they've been coming off that level at January, 68. It was this year. They're above the 50 and above the 200-day moving average since May. So, Tom, I mean, people are paying these prices. They're going to these shows ultimately. What could derail some of the momentum here?
Well, I think if you see
Barbecue hasn't shown the reversal yet, but
as a whole, remember,
I am liking the support it's showing. This higher low.
The data that we've seen has just been staggering to the upside.
I'll be patient because we had that yesterday too. Low, higher low.
Recession fears at this
Always
point.
dump at the end of the day.
Department of Justice
with
their investigation into some of these companies, and it's not just Live
I have to wait for an inverted head and shoulders.
It's also like Airbnb.
Put us back up to 30 cents.
Pretty substantial, and that eventually gets to a consumer where they're going to say, hey, I wanted to pay $85 for this concert ticket, now I owe $121. How long can that last in a high inflationary environment? I think that's going to be one of the concerns here moving forward because, as we all know, we've talked a lot about travel and flights, cruise lines, Booking.com, a lot of these travel companies that are doing really well. Well, this fits into that travel and entertainment segment, and the demand for those tickets continues to rise, Ben. And I know you didn't get those Taylor Swift tickets, so you're probably tearing up about that.
Well, I'm thinking Tom Beck, really? I mean, songs like I'm Looking Dreams, Super Cool. What was it? Where's It At? I mean, these are Devil's Haircut. I think that applies perfectly in this instance.
Yes.
But
Loser.
Yeah, I mean, these are songs I haven't heard for a while, Tom. This is a throwback.
Oh, Beck, he's awesome in concert, Ben. Because he changes up every album. Come on. You don't want to listen to the same thing over and over again. But demand remains pretty robust across the board. And I was just pricing out concert tickets to see Jerry Seinfeld in concert. There were floor tickets going for $1,500, $1,000, and next to the stage, $250. At some point, there's going to be that point where the consumer can't absorb the additional fees. But once September starts, they're going to have all the fees included. So instead of looking at, hey, I can afford $85 for a ticket, you're going to see $125, and then you're probably not, maybe, a little less enthusiastic about buying those tickets.
Do you call it a concert if it's a comedian? It's stand-up? Or is Jerry Seinfeld going to go sing?
We appreciate you. But up next, we're going to have Under 30, where we
Peloton, almost 6.
So stay tuned. Next Gen Investing. We'll be right back.
I don't know. I don't. That's a good question, though. I mean, it's like a concert for comedians. Otherwise, you just say I'm gonna go see stand-up, which is kind of weird. Climbing back up. Adam Sandler singing Hanukkah. That's funny. He hasn't done a Christmas album in a long time.
The wave season was one of the most successful that it's seen in a while. That's the time where people start to book their vacations for the summer and maybe early fall. But let's find out a little bit more about it. Ben, what are you thinking first?
Well, this is a stock where, in many ways, I guess for the longs, one could argue that their ship has come in because we've done really well in shares of CCL. This week, a big move from 1390 up to 1868, and I notice, it kind of ties into what we were talking about earlier about those worst case recession scenarios not coming to fruition, worst case recession scenarios being pushed back. This month we saw
wait till July slaps you.
12 up to now near 19. We were around $8 if you remember to begin the year, Renita. This year we've basically more than doubled in price. So from last October down around $6.11.
There's RSI divergence setting up.
This is a stock that's doing
at
very
A1.
well, holding above the 50, holding above the 200-day moving average since the beginning of May. If you remember, we double bottom, formed around 850 back in March and April of this year. Back to April of last year levels now. 6 out of 7 of the last weeks are going to have been to the upside. So I think this really speaks to some of the strength we're seeing in some of these individual travel stocks as services continue to be in demand.
And this one's so strong, it got a couple of upgrades today. And why don't we bring in Jeff Pierce? He's Senior Manager of Derivatives at TD Ameritrade to talk about more. Jeff, tell us what is happening with this stock right now. What are your thoughts?
Well, as you mentioned, demand has been very strong. We've seen analysts weigh in, especially since their earnings report on the 26th. Today, we have Tigress Financial raising the firm's price target to 23 from 13, keeping a buy rating on the shares. The analyst says the company continues to benefit from strong travel demand and is on track for record revenue and cash flow by mid-year.
Zoom waking up finally?
Drive further share price
Just kidding.
as well. The firm adds
Not finally. It's only been like 2 days.
on travel,
Yeah, there you go. 1.3.
pricing and onboard spending to continue to drive a major recovery in the business, which they expect these business performance trends
Nice to see.
that they're going to exceed
The overall
2019
market's almost up
levels.
1.3. But
As you were talking
yeah, good,
about,
good job,
we
Zoom.
see this price target move from 13 up to 23. They've been trading above $13 since June 9th. So this may seem like a bit of a late price target adjustment, but I think a lot of analysts and investors are kind of watching the stock. Demand has been very strong. They closed out the previous quarter with about $7.2 billion in customer deposits. That's well above the records we saw pre-pandemic of around $6 billion. But the concern is, when does this demand start to level off, and how severe is that? We know it appears like they've got a path to profitability. But this demand is really pent-up demand from the pandemic. The expectation is that at some point it is going to start to slow down. And of course, one of the looming issues for a lot of investors out there and analysts is if the consumer starts to change their spending habits. We've already seen them change them in stores. They're getting away from discretionary items. They're going for lower-priced items. At what point, if at any point, does the investor say they're no longer going to spend money on experience in the way that we've seen lately?
Something else that's been a concern of investors with this stock,
I like to look at
stocks, has been the debt
BNRC.
load that it's taken on. Now,
That's
the
huge.
company is trying to chip away at its debt load, but where do we stand right now?
Yeah, Carnival had about $34 billion in debt to pay off. The company said it had about $1.4 billion off its peak debt after paying down about $1 billion of variable rate debt in last quarter. So we've seen that continue to happen. We're watching them pay off debt. That is a big question mark, though, if we see demand start to drop, what sort of payments we're going to see on those debt burdens. Expenses are also rising as well. We saw expenses rise almost 19% to about $736 million. But at the same time, we're seeing passenger cruise day increase over 91%.
Back up to VWAP a little bit. It's still barcoding down here.
Over 98%, and expectations
I might
for the most
wait
part
for the rest of my purchases above 30.
Q3, the company expects earnings per share of 70 to 70 cents. They're expecting the occupancy at over 107% or higher. And then for full year, they expect occupancy about 100%. So some pretty strong numbers on the outlook.
Jeff, I'm curious, obviously the overhead there is a concern, but kind of getting back to the concern that you raised earlier as far as, sounded like you were saying maybe a best case scenario has already been priced in here. And we were getting back to what we were talking about earlier as far as Live Nation and tying in some of this demand for services and strength and employment. I'm wondering if we were to see labor conditions here in the U.S. start to falter and give way a little bit. I mean, I always joke around and say, it's not a vacation if you don't have a job to come back to. It's called unemployment.
Yeah, exactly. And I think that's what investors are concerned about. Now, there certainly is a longer runway situation where we don't see demand level off. And if we do see it level off, it maybe does.
Could be the head on the day.
Certainly the stock
it's like a double top potentially.
Room to run. We know that all-time high was a little over $72 in 2018. Even if we look back just 3 years ago, they've been up over $31
new highs
in June of 2021. So there is still room to run in the stock. If we see inflation come down, if we get more confident about the economy, we may see this demand level off at a much slower pace, which would be very good news for a company like Carnival Cruise. Keep in mind that Q3 is coming up. That's one of the busier seasons for them, so that's certainly going to be important from an earnings perspective.
Jeff, in the 30 seconds we have left, what do you think will be the next impetus for this stock?
I think they're really going to be looking for profitability. I mean, just that step in the right direction is what investors are looking for.
We're so close to the key.
Debt, as you mentioned, is going to be a big deal as well, but we're looking at profitability mostly.
All right, Jeff Pierce, thank you so much. Jeff Pierce is Senior Manager of Derivatives at TD Ameritrade of derivatives trading. I think we had a pretty good show
Yep.
today, huh, Ben?
Yeah, I think Jenny and Alex would be proud.
They would be proud. Thank you so much for joining us on Next Gen Investing. Have a great day, folks.
If I have easy on Zoom. Whew. I have to have the volume kick in at some point next week. Is that without market? Market, I think at the very least, is going to make a handle. It's the future, Cameron. Threatening a breakout. Scanners will go off? On Zoom, you're saying? Is breaking out on such low volume? If we don't get our reversal starting today, I might just hold these futures over the weekend. Probably get margin called, but I'll be back in compliance next week if it does sell off. Do people have that specific scanner? Stocks breaking out on low volume? Where would you consider GNRC breaking out on low volume? I don't see the breakout happening until you actually got volume.
turning bullish. Daiwa upgraded NVIDIA to outperform from neutral with a price target of $475, up from $408 following its tech tour in checks.
Looks like it's actually going to break out now.
Upside from current levels on top of the almost 200% year-to-date gains. At least
One last little high push. Let's see.
Previously, that
Might be a reversal candle.
Wrong,
Green to red.
How important generative AI would actually be to the world. They stayed cautious or on the sidelines with that neutral rating because of concerns of weak cloud and enterprise hardware demand in 2023, but they're now more confident in NVIDIA's commanding position for AI. The analyst says generative AI will be difficult to replicate near term from competitors such as AMD and Intel, given NVIDIA's library of programming support, familiarity and developer support, and full stack of solution of GPUs, Infinity Band, networking, and support software like AI Enterprise Omniverse. So this analyst finally turning bullish. I will say at this point there are 50 analysts that cover the stock, and despite the fact that it's seen this incredible run up this year, 43 of them still have a buy rating. So 86% of analysts still bullish on this name. Median price target is $470 now. So it's currently trading just below $425. So quite a bit of upside, and Daiwa is now in that camp, thinking it's going to continue to run higher.
Truly amazing. And what I also thought, I mean, anybody who was shorting this stock got squeezed, and the short interest has also fallen. So those who are betting on the other side of this are falling, and they're out.
Just can't bet against NVIDIA right now.
How about Nike? I mean, this is a different story after, you know, a great run. A miss now.
Yeah, first
See here, it's
earnings
starting
miss
to wick.
in 3 years for Nike, and we're seeing it down about 2.5% today. So it's a weight on the Dow. Product markdowns, higher costs for input, freight, and logistics all weighed on profits. So EPS of 66 cents missed analyst expectations by a penny. In turn, gross margins also came under pressure, coming in at 43.6% versus 45%
It's a reversal candle.
the year-ago period. Revenue did rise 5%.
The high of the year,
$12.82 billion.
potentially.
That was higher
What we're looking
than
at.
analysts were expecting. So this was very much a mixed report. In Greater China, Q4 revenue grew 25%. So definitely seeing some improvement there post-pandemic lockdowns. Also saw improvement in its inventory position. But Nike offered kind of muted guidance for the quarter ahead and for the full year. In the quarter ahead, it forecasts revenue to be flat to up low single digits. Wall Street was expecting more like close to 6% sales growth. And then for fiscal 2024, expects revenue to grow mid-single digits. So definitely seen as a bit more muted. I will say Nike said on the earnings call, our priority for fiscal 2024 is to drive healthy full price growth. So really noting that full price versus the markdowns that it's had to do to get rid of some of the inventory, but says we are closely monitoring the macro environment, consumer behavior, and retail trends, because let's see if consumers,
I can make the arrow huge, but not my text.
want to pay full price for Nike, sneakers and such. I will say we did see quite a few price target cuts.
There you
Wall
go.
Street, we saw B of A cut to 125. They're in
Wherever
the
in my
neutral camp.
chart.
Deutsche Bank also lowered to
High of the
125,
year.
but they're in the buy camp. They actually
Well, that's all messed up when I do that.
And said the key thing coming out of the print is Nike's much improved inventory position. So taking a bit more of
What the heck?
optimistic stance. TD Cowen cut to 125, kept a buy rating, but John Kernan from TD Cowen, who actually made that call, was on Morning Trade Live with me this morning and actually said Nike
That is
is
so
not his top
jacked.
pick. It's Hoka parent company Deckers that he likes best heading into the second half of the year. Should also note UBS boosted its price target to 150. Wedbush also boosted to 131. So at this point, the majority of analysts still are in the buy camp. The median price target for Nike is 130. So
Green to red, let's see it.
About $20 upside from here, but they're
Good
scaling
clock,
back
it's
some of
time.
those expectations based on guidance and based
Ready.
on the margin pressure.
I've been seeing Hoka on the subway.
Yeah.
See, I think that's always a great
Hoka?
indication of, that's the color when you get to see.
Getting phone calls on air?
the subway. I've
Nicole.
seen Hoka. And
It ain't
by the way,
Independence
Super Bowl
Day yet, girl.
yesterday, we had Zach Waring. He had a sell on Nike. Yeah.
So there's only
All
4
right.
cells on the street, so.
Caroline Woods, thank you. He had it from yesterday. I have to give him credit. Thank you, Caroline Woods. Now let's take a look at the bigger picture. Ann McCabe's with us, CEO and partner at Curo Private Wealth. Thank you for being here. So tell us about what your thoughts are on some of the data that's been coming in. I mean, you've noted it's been pretty positive, right?
Yeah, thanks for having me, Nicole. It's good to see you. So I think the story so far this year has been how the economy and the markets continue to surprise to the upside. And we've seen that in the data that was released this week as well, the economic data. So we saw a massive increase to a revision really to Q1 GDP numbers. We saw weekly jobless claims come in the lowest level we've seen since May. We got June consumer confidence data, which is the highest we've seen in 18 months. We got new home sales surprise to the upside. And then just this morning, we got the PCE data, which is the Fed's preferred inflation target. And that came in at the lowest level we've seen since April 2021. So despite all the challenges and all the recession talk and defying all the expectations that many of us had for this year, the economy and the markets continue to surprise to the upside. So it's been pretty fascinating to watch so far this year.
So with that and all that's been going on, I mean, what do you say to the folks that say recession ahead?
Yeah, so as bullish as I sound, I should admit that our base case is still that we have a recession. We think we've probably bought some time. It's probably going to happen a little bit later than we originally expected. But the bond market is certainly telling us that we will have a recession. And if you look at what's happening in the regional banking sector, we think that those regional banks will have to shore up their balance sheets and we'll probably see a decline in lending. But the fact of the matter is the Fed can't increase interest rates as much as they have, as quickly as they have, and us not see a recession in our view. We just don't think the full impact has really trickled down to the overall economy quite yet. So unfortunately, we do think we'll have a recession. But I think it's important to remember as investors, we could already have seen the bottom in the stock market. So we need to distinguish the economy from the stock market and make sure that we're not making investing decisions solely based on where we are in the economic cycle.
Right, understood. And you noted in your notes how market breadth was improving. And if, let's say, the bottom
She's right.
we're in, what would you say to folks here? Because I know you don't want to try and time the market. What's your advice to investors?
Yeah, I think your point, Nicole, on breadth is really important. I think this is a story that's not being talked about as much. The story so far, 2023, has been, oh yeah, the top 7 stocks of the S&P 500, which all happen to be tech stocks, are fully responsible for the increase in the S&P 500. And that's not the case anymore. 58% of the S&P 500 companies are up year to date. And if you look at the top 10 performers, yes, they are tech heavy, but we've got some cruise lines in there as well as a home builder, believe it or not. So what we say to investors is we do not believe in timing the market, but we do believe in making investing decisions based on the time horizon of your goals. So we have started to raise cash for clients. We are looking for clients who have short-term cash needs anywhere between 6 months and a year. We are looking to lock in some of those gains. So that could be to satisfy a required minimum distribution that you need to do before the end of the year. It could be for a home improvement project or perhaps an upcoming college tuition payment. So for folks out there, if they have short-term cash needs, we do think that now is probably a good time to lock in some gains, raise some cash. The good news
Get a
is
green to
you
red
can
candle,
lock in
but
those
this
gains
next
and
candle
park your money in a high yield savings or
might be
money
red.
market, earning 4.5% to 5%, which is not bad at all. So at least you're getting paid to wait. So for short-term cash goals, we think it's probably a good time to take some money off the table. For intermediate to longer term investors, though, our message is to stay diversified in a diversified portfolio and stay invested, because we do think the trend is probably to the upside over the second half of this year.
So yeah, I want to break this down. So for someone who's more short-term, you're saying take some profits, particularly in tech and even the S&P 500, which has had an incredible first half of the year, right, when it's up 15%, let's say. You're taking money off the table, putting it in short-term investments like bonds and things. For medium to longer term, can you just review that one more time? Because you touched on it, but I didn't quite get the takeaway.
Yeah, sure. I think the takeaway is only take money off the table right now if you have short-term cash needs. So if you need money in the next 6 months to a year, we think it's probably a good time to raise some cash. If not, we say stay fully invested. You know, I think it's important to remember that we can't time the market. And also, nobody's crystal ball at the beginning of 2023 was telling us that the S&P was going to be up 15%, right? So despite as much as we study and we review these things, it's impossible to know exactly what the market is going to do. So takeaway for intermediate to long-term investors is stay invested. If we do get a pullback and you have cash to put to work, do that, but stay invested.
And wonderful to speak with you. Thank you so much. Ann McCabe, Curo Private Wealth. Thank you, Ann. Later this hour, let's take a look because Dan Ives will join us. We're looking at Apple, $3 trillion valuation. His bull case is $4 trillion. All right, let's find out what he's thinking here. And everything else tech. And we'll take a look at the U.S. consumer after consumer sentiment data came in above expectations today. And our panel is ready to take a look at the earnings of Constellation Brands. But up next, we'll talk about the stock market, which has been leading the economy. How upbeat should you really be? Coming up. And of course, July 4th, we're closed. So there are some updates there for you for Monday and Tuesday. In the meantime, here are some more market movers for you. Looking at Apple hitting a new all-time high.
Barbecue definitely can go to $20. It just you need a big leveraged buyout.
And he sees more room to the upside for this one.
Something along those lines. And then you need a solid plan for the company to where it rises naturally enough so that shorts would want to close. $20, you're not going to get there naturally. At least not soon. It'll take years if it's not for some kind of squeeze. Squeeze only happen if it's not getting liquidated. There's big news. It doesn't go bankrupt. You hold it long enough, it'll go to $20. So.
June. Cloud company Snowflake higher on the day after Jefferies raised the price target to 205 from 180, keeping a buy rating on the shares. The analyst said the company is one of the dominant data clouds with AI tailwinds, but stock reflects good news, trading at one of the richest multiples. Last but not least, let's check in on Bitcoin. It's at 30,805, down 0.75%. Let's continue our conversation about the markets. Jeffrey Smalls with us, President Arbor Financial. And I know you like some of the names that have been high flyers, but before we get to that, what's been driving everything, and can it still be a catalyst for the second half of the year?
Well, the stock market and the economy are connected, Nicole. However, the stock market generally leads the economy, and the economy is definitely supporting what the market is doing right now. Full employment, rising real estate costs, real estate transactions are actually increasing, car sales increasing. And so the Fed isn't really having an effect on the economy right now as far as the numbers go. We're still waiting for those numbers to come in. However, we do expect there to be a significant decrease in that earnings trend that we've been experiencing for the last 7 quarters. We will see earnings bottom out in the second quarter of 2023 after earnings are reported post July 15th. And so there could be a chance to pick off some buys at that time. And then we'll see earnings start to begin to reaccelerate in the first and the third and the fourth quarter. But that all really depends upon also what the Fed does between now and then.
So that's the whole thing. I mean, there's a lot of optimism surrounding earnings too, right? That could be a catalyst for this group. It almost seems like insane, but it seems that's how it's going.
Well, that's exactly how it's going. And, you know, the proof is in the pudding. I mean, you can take a look around your neighborhoods and see the economic activity. Everything is thriving right now. I don't see too much of anything in a recessive or depressed state other than corporate earnings. And of course, corporate earnings peaked because of all that excessive stimulus we did post-COVID. And so, of course, we're going to have a contraction. That's natural. Economics will cycle. But, you know, the markets are going to be more dependent upon the Fed in some ways and less dependent upon the Fed in some ways, as we see right now. But the Fed still has the control over the markets. And whatever happens on July 24th and in future meetings, do they really want to raise rates another 1%? Does the data support that? Will they go higher? They keep changing their narrative. And the market really isn't taking it seriously, Nicole.
Okay, so at this point now, let's go over some of your stuff.
What do you got for us today, Laura?
Talk about the Magnificent Seven. You are right there. You have some of these names that have done incredibly well. Can we start with Google, Alphabet Google?
Well, sure. I mean, they're, you know, the 7 or 8 stocks that have carried the market this year. You know, and that's the same thing that I always say on your show. I don't have anything really new to report on Google other than they have become an AI play, and a lot of those Magnificent Seven have become. They've attached themselves to that AI inertia and potential for growth on AI as time goes on. But, you know, Google is something that we can't live without. I mean, it's a huge part of our lives. They don't really have any serious competition. And so, you know, this is a stock that you ultimately want to own for the long term if you want to own part of the Magnificent Seven. And we don't call them the FANG stocks anymore. We call them the Magnificent Seven, and Google is in that mix.
I know. It's incredible when we think about what's been going on. And while nobody was watching, Meta took off.
Well, you know, Meta was beaten up so severely last year. It dropped to $122 a share at its low. And I mean, all of us kind of looked around each other and said, this is an absolute gift. There is truly blood in the streets, you know, with this stock price. And it is time to start ramping up ownership positions. And so there's no doubt Meta has rewarded us handsomely. And we see Meta going up beyond where it is today in the 280s. We see it peaking out around 300 before year end.
And look, the history shows the
Okay, I got
the first half could in fact
more dailies
go
and
into
SPY.
the second half, according to
This is when I should have bought the other ones.
To your point on Meta, it went from $88 and right now is at $288. An incredible run, no doubt. Last but not least, what about Amazon?
Well, you know, Amazon, of course, is part of the magnificent grouping of companies there that have carried the market this year, and that's also something.
These are 441s.
Amazon, though, you know, has a tendency to ignore fundamentals on its share price, and we did have a call for it about 140, 145 this year. I think the last time I was on the show, it was around 108. It's back up to 130. And so it will have a plateau out of the Magnificent Seven before the rest of those stocks that are in that grouping will, in terms of its stock price, because its fundamentals aren't quite as strong.
Right, understood. So the big picture here is stay the course, right? I mean, even if the Fed were to raise a couple of times, which seems to be the case, you would stay on board?
I would definitely stay on board. I mean, it's obviously the pain trade is severely painful, acutely painful here with these stocks because now you're chasing them after their big run-ups. And the question is, can these companies increase their top line numbers now that they've gerrymandered, financially engineered their earnings with layoffs and other cost-cutting features on their balance sheets? And so now
Yeah, I
they're
think
going
it's
to have
about to
some
drop.
challenges in the back half of the year, in the third and fourth quarter going forward in the next year is can they increase their top line numbers? Can they increase their revenues? And so some will be better than others.
You are concerned about the cost of capital and the spending that's going on in the budget without getting into politics. I mean, we know lending and all that has gotten very tight, too.
The money is still flowing. Anybody can get financed on a new car. If you want to buy a home, you can buy a home. So I don't see the lending restrictions other than what we hear about in the press. But lenders are getting scared and they're getting a little more leery and they want more credit worthiness, I think is the constrictions that we see in lending right now. And so it's a little more difficult, just a hair more difficult to get the financing that you want. But yeah, the cost of capital is an issue. And of course, the higher rates go, the more money goes towards that cost of capital, the more PE compression we have in corporate America, and the harder it is on the consumer. I mean, to qualify for a $500,000 home today, Nicole, you've got to generate income of in excess of $150,000 a year if you're going to put 10% down. And so that prices out quite a bit of people from purchasing real estate today.
All right. Jeffrey Small, Arbor Financial. Thank you so much. Good to see you. Appreciate it. Great conversation there. Coming up next, all things Apple, new highs, $3 trillion. Can it go to $4 trillion? Maybe. Dan Ives has a bull case for that. He'll talk to us about that, other tech stocks, what he's watching. We'll be right back.
If barbecue wakes up here with the market coming down.
I'm Nicole Petalides. Big day for Apple. $3 trillion valuation for the second time. So as we look at what's going on here and see this rally happening, which is up over 45% on the year, and Dan Ives is with us, Managing Director, Equity Research, Wedbush Securities. Dan, I'll give you the kudos because you've been calling bullish on Apple for the longest time, and here it is at all-time highs today. And you even have a bull case for $4 trillion. Come on, tell us about it.
Yeah, Nicole, I don't think this doesn't stop what I view as sort of just not just the bull market intact. When I look at Apple, they're just starting to further tap into their golden install base. So when you look at services, that's a big part of how we got to $3 trillion.
Oh, I might make a new high here. Let's see.
Bears sitting there in
I'm up on
hibernation
230.
that we're calling for 1.5 to 2 trillion, trying to figure out how we got here. I think it's about that install base in Cupertino, and I believe that potentially the best is yet to come. As we go into just more and more uptick in services, and then eventually you got an Apple Car coming 2026, we believe.
Okay. I mean, we did actually, I know.
Did they
Apple
squash
Car,
that
right?
car?
That's something we've talked about for a long time. We did actually get
That's still a thing?
the headset, the $3,000 headset, right? Or maybe it was more than that, $3,500, but that was really for the pros. But it came out, and they did it, and that was to woo developers. So in the meantime, when UBS or all these
Spy
people
wants
come
it.
out and they say iPhone
It
sales
wants it.
worries, which is the headline today, UBS warns of soft iPhone sales. I mean, what do you say? Like Kaflooey? I mean, we've had
New
this
high there on
conversation, I
SPY.
think, 20 times.
Well, I think, look, there's a lot of boy that cried wolf calls out there the last year and a half, right? In terms of Apple.
High 444.
I think they continue, in my opinion, in terms of many of the bears. They missed the broader story that's happening. In terms of weighing,
I was
what I
wrong.
believe is going to be for iPhone 15, you have a mini super cycle playing out. 250 million iPhones haven't been upgraded
Reminds me
for
of
the last 4+ years. And it's about that services.
the day ends. That last time we just rallied all day and it closed at the high like that.
And this right now, this is the
That's
appetizer.
crazy. That
to
last
what
Friday?
ultimately is just going to be, when I look at services, further upticks there, and then AI, that's really going to be what I view as the home run, as we believe they're going to build an AI app store within their ecosystem. I think, Nicole, it ultimately comes down to Cook plays chess. Others think he's playing checkers.
That is the oldest saying in the book, and I love it every time you use it, because I know you've been using it in your note and talking about it today, and I was wondering if you were going to use it right now, and I'm glad you did, because this is something different. I mean, the fact that they have so many things under the umbrella and the different revenue streams, like you said, the services is going to bring in, close to $1.5 trillion. You have wearables, you have the upgrade. I mean, do they need to bring out the next great thing, because a lot of folks have complained that the latest iPhones have not had that wow effect and wooed people to upgrade? Will the 15 have something like that will get everybody to upgrade?
Yeah, Nicole, as you've talked about for many, many years. I mean, they at $500 billion, they said it. At $1 trillion, they said it. $2 trillion, said it was too expensive. Saying the same thing at $3 trillion. I think ultimately the transformational, the special growth companies like Apple in the trophy case, you can't just look at over the next year. You have to look at ultimately what's driving this broader rally here. And I think this is just the start of more and more penetration to the install base. You look at the chip. I mean, the more and more they're owning their infrastructure in terms of M2 that we see there in terms of the M2 chip, where they're essentially being Intel at their own game. And that's why this is just another trophy case moment for Cook as Cupertino flexes their muscles yet again.
So with this AI app, for example, right, and you have a 220 price target, you obviously think it could go even higher. Things are a little different now than they were even a couple of years ago for Apple, right? It's not just that you're on the Apple bandwagon, but you like what Apple is doing. Month after month.
Barbecue, little pop above VWAP there.
They're building the future. Yeah,
770.
A good example. When you think about Vision Pro, most thing about it, 3,500, super expensive. They're not going to sell that many units. That's not the goal. The goal is they're selling to developers. You're going to have thousands and thousands of use cases. That ultimately is just the beginning of the AI app store. And I could argue the AI story hasn't even started to play out in Cupertino from a stock perspective, which is why I think this is a name. I still view this as a bright green light to own.
with what they can gather with this, you said they can go into fitness, they can go into health, sports, medicine, movies, etc., a myriad of other areas. So it's just the beginning for these developers, and the whole idea is to get the best talent on board with Apple. Can we turn your attention to, I mean, you want to give me some crazy number? Do you think it goes, before we move on to something else, 300? I mean, do you have like the bull case? I know 4 trillion, but what does that translate to in the stock price?
Nicole, I think in 2025, maybe me and you know, we having lobster rolls out in Long Island, and this is a $4 trillion market cap.
All right, I'm in. Sign me up. Let's talk about some of the other things, some of the other areas that you like within tech, names that you've loved, names that you're still extremely bullish on. Can you fire them off for me? And then I need a Tesla quickly.
Okay, so Microsoft, obviously they continue to own cloud in Redmond, Nadella. What we're seeing there, I think AI story, $3 trillion today is Apple. We believe in the next year, Microsoft joins that exclusive $3 trillion club.
Wow.
Then you
This guy likes the SPY.
Salesforce.com, cybersecurity. I don't just view it as a table pounder. I view it as a double table pounder. Palo Alto, Zscaler is one
All
of
right,
our
head,
favorite,
shoulder. Let's see what happens
CrowdStrike
here.
as well.
Right shoulder
in
or
my
not.
opinion, we have a new tech bull market that is underway.
And you said that's going to be driven by earnings that are due out soon, right?
I think 2Q, we sit here a month from now, it's an inflection. We're starting to see from our checks. I'm not saying it's rosy and rainbows. We're starting to see that inflection. It's starting to play out in terms of enterprise spend, cloud spend, cyber. I think digital advertising, what you'll see from the likes of Meta, Google, and others. And I think this stabilization is ultimately going to lead, as more investors are focused on 2024, I think this is really the start of a new bull market with AI, the gold rush, that I really view as a fourth industrial revolution. And I view this as a 1995 moment, not a 1999 dot-com hype.
All right, so at this point now, I just wanted to also pick your brain on Tesla. Still the leader?
Just some of the part story that's playing out. Because look at the supercharger with Ford and GM. Now more and more, I'll call it an AWS moment. Investors are starting to understand the broader sum of the parts of what Tesla could be. And this, we believe, is on its way to $1 trillion market cap. I mean, you have deliveries over the weekend, which should be generally in line. But the bigger story here is that they continue in terms of electric vehicles. It's Tesla's world, and everyone else is paying rent. And that narrative is further playing out with the 313
back
area
above
code now used
BWAP
for
there.
supercharger.
Yeah, I mean, I saw that. They're all signing up. And so Tesla at 262 today, where is that headed?
300's base case, 340 bull case.
Okay. Love when you're on, Dan.
Just bull.
All right, lobster rolls and trillions for Apple. 4 trillion for Apple. We're in. Dan Ives, Wedbush Securities. Thank you always. Wonderful to see you. Still ahead in the second half of the show, we'll take a look at consumer trends following today's consumer.
Going for Teladoc. No, Teladoc is a squeezy one. Or to Zoom. You're going for all these COVID plays. It's like there's gonna be a big catalyst soon. These are all the COVID squeezers. Yeah, they've all had their squeeze and now they're back to where they were. I actually like Teladoc. I like the concept. I don't know financially or how it's run, but I think that could definitely be a... That happened last quarter. Negative $3 billion operating income. What happened? Jeez. I think the principle, I guess, the concept. But yeah, these prices on Teladoc are nice. Long before COVID. Back in 2017. I know, you're still at the chart. I like your chart too. I can see the Bollinger Bands getting tight there. Super tight, so I think that's you have high gamma then, right? Small moves make big movements in the price. Got that wedge. Not broken out yet, but you like to be early. You don't wait for confirmation. Sterling is the greatest strain of COVID. It's bad. I thought this was real. I'm like, dude, this is it. I was like, oh, Sterling is Bell. You need a lot of time with this because you have no confirmation. I mean, it could break to the downside too. You don't always break up. A little diamond bottom, huh? Something hard to recognize. It broke out of that. Dude, I love how far out of the money you always get. That gap to fill up there, huh? 55? Break down, they fly. We fly. Barbecue holding up above VWAP up there. See if you get a push back to 30 cents before close in the dead green. What's up with this options chain? They don't have that many strikes. Not very liquid. Not bad, just monthlies. August only has up to 35 though. That's what I like to hear, Cameron. Stein.
That we've gotten, she said a recession still possible. They still have that in their
Over for the win.
and they're just going to hold steady through it.
I don't think August is enough time. I mean, for your strike, yeah. But you don't really care to get in the money.
All right. How about Bitcoin? As we heard about Fidelity.
I love in the money.
Jumping on Blackstone. Everybody's getting involved in the Bitcoin ETFs.
Yeah, they sure are, but it seems like that could get pushed back a little bit now per comments from the SEC.
But it hasn't confirmed the move yet though, so I appreciate more time.
After posting new highs for the year, 31,730 pre-open this morning before the cash opened for stocks. We sold off down to 29,600. You can see, and you know this was again new high for the year above 31,700, but it was short-lived, right? The intraday volatility came in reaction to the SEC Exchange Commission, basically Securities and Exchange Commission, saying that the recent application filed by asset managers to launch that spot Bitcoin exchange traded fund, they said they're inadequate, citing people familiar with the matter. The Wall Street Journal reported that the SEC informed exchanges, the NASDAQ and the CBOE, which filed the applications on behalf of those asset managers, including BlackRock, Fidelity Investments. They said these filings aren't sufficiently clear and comprehensive taking a look here, you can
I
see
see
the
him out for
intraday
2 more
volatility,
months.
but let's take a step back from the more granular price activity. And look, Bitcoin's still holding above the 50-day moving average, but running into some resistance up around this 32,500 level. Keep in mind, it was these ETFs that was supposed to provide some legitimacy, as the bulls have been talking for years here now. So this is going to be one to watch in the coming days and weeks here. But yeah, some of the weakness here, the pullback here, Nicole, this ties into the optimism we were talking about in terms of stocks and, getting back to your point in terms of those expectations for a recession being pushed back or shelved, even possibly depending on who you're talking to. But that's what's giving these markets a lift, it seems like.
Yeah, and right at the end, you could see that move higher since the middle of June, since we started talking about
What I like about closer to the money too, then I can sell calls against it. It's much easier if they're closer to the money instead of having to close out early.
Recent highs. We'll continue to follow that story. Thank you so much, Ben Lichtenstein. Great to see you.
Lichtenstein.
All right, time now to discuss the health of the U.S. consumer. Quite the resilient consumer. In fact, we saw a beat on consumer sentiment this morning. Jeff Hartigan's with me, partner and a consumer products retail lead at Barringa. Thank you so much for being with us. So let's talk about the sentiment data. What do you think? I mean, we've seen a very resilient consumer.
I think the U.S. consumer will continue to be resilient. I think the U.S. consumer enjoys choice, a lot of choice in the marketplace. I think that there is economic uncertainty that's got decisiveness
It's kind of a low blow.
Within organizations, companies that are serving the consumers in a bit of a wait.
I'll take it off your tab of missed donations. How about that?
I don't see anybody pulling back on innovation. I see innovation as the key. You were just speaking to that on the discussion relative to Apple, and we will see what plays out here over the next couple of months.
Barbecue's price?
What about the survey?
$12.
And some of the trends. Tell
There
us
you go.
some of the
$27.89.
takeaways and specifics there.
Yes, thank you. So
Sorry, I
thank you for the
clicked away from
opportunity
it for
to
12
share
seconds,
some of our
Stink.
findings and data with
Your
you.
13-cent investment.
We commissioned a
I know it's
survey,
kind of nerve-wracking to hold.
at the concept and the notion of kindness and the impact that
Al, looks like you only got 2 of them, man.
has relative to business performance. Kindness is something that is part of our core
You're
beliefs
scaling
here
in?
at Barringa. We're a certified B Corp. And we advise many of the world's leading organizations. We wanted to make sure that we have empirical data that points to whether or not the concept, the notion of
Missed
kindness
donation
has
fund.
an
There we
impact on
go.
bottom line and top line of companies.
No, you're not getting a return on
Net
that.
from a results standpoint,
There's no some kind of like
is that first and
yield return on
foremost,
your
that even
donations.
when times are
Thanks,
tough,
thanks,
even
Al.
when
Appreciate it, man.
consumers are uncertain, that they still do value kindness as they consider purchases. You will see in some of the notes on the screen there that roughly 4 out of 5 U.S. consumers are more likely to purchase for companies that they
I'm betting you to sell.
You'll see another in
$27.89,
the
Dink.
equation,
Up or down 4.5%.
where
Up almost
organizations
10%
will
from the
design
lows,
time
though.
where
Or
consumers are
7?
refusing to
Where are we
buy
at?
products.
9%, yeah. 10% from the lows.
The data is coming back. What we take away from it is that when wallets get tight, kindness matters. I think that's incredibly important right now, we believe, as an organization, as organizations are looking at how to deal with economic uncertainty, the strategies, the tactics that they should employ in the marketplace, that perception matters. Perception of your consumers, perception of your trading partners, suppliers, perceptions of your shareholders matters as individuals look to make those buying decisions. And then we think there's a long-term implication here, that long-term being this increased notionality of the triple bottom line of the combination of people, planet, and profit as being a driving force over the long haul.
Yeah. You know, Amazon just went by on the big board up there, and that would be an example of a company that's done incredibly well, but has come under some scrutiny as you've had some of the workers talk about their work environment and some of the challenges they face. You know, you think about some of these great apparel companies and the sweatshops abroad and child labor issues, things like that. Do you have any specific companies or things that, so people want companies that are treating the workers well versus poorly? Any examples of that or anything that we can use as a takeaway? Clearly, kindness counts. That's good.
Yeah, so I think first off, just before, if I may, I don't think there is such a thing as a holistically kind or unkind company. I think there are organizations that over time have done a better job of successfully curating a
Here you go,
culture
spy. Make that
that is
head.
putting kindness at the center of their business
Do it.
model,
Or just
behaving that
flag
way,
again.
living that way. You mentioned Amazon. Amazon, let's not forget, even in our survey results, that price and service are still and always likely will be two of the most important factors in a consumer buying decision. Right behind that is where we find kindness as the differentiation and the advantage of the service and the price proposition grows. Choice most likely is kindness is somewhat diminished in that. So I think when you look at organizations that enjoy a very unique point or very unique position in the marketplace, there may be a little bit, the data might suggest a little bit less of a direct tie. We talked earlier today, I believe, about a company like Nike, and you reference a situation with labor and sweatshops, which if you go back 20, 25 years, there was a very public challenge that
In my
Nike
honor.
went through with respect to their global supply
This is a
chain.
dishonorable buy.
Interestingly enough, they are at this point in time are completing and continuing on a journey to be viewed
I'm
as
moving
one of
down a
the
little
most
bit.
kind organizations in the world. They have done that through looking
UOP's a
internally at their
long ways.
operations, at their behaviors. They've added factory audits. They have made it a focus to put the individual people at the center of their business and understand that how they treat people, whether it's their organization or whether it's their suppliers, matters. And now where you see them is one of the leading financial institutions has listed them as one of the most sustainable organizations in the world, certainly from an apparel and footwear standpoint relative to social and governance.
All right, thank you for all of that. Jeff Hartigan, appreciate it, of Barringa, thank you.
My pleasure. Thank you very much.
Still ahead, we bring in our panel to discuss Constellation Brands. You could say, hello, Modelo. That certainly helped Constellation Brands. So let's find out what worked for the company and what hasn't been working. We'll break it down. A couple of analysts standing by.
Many traders may be willing to take
Feel obligated. Jeff Hartigan. Mm-hmm. 476. Well, if you look at my notes here, this is the high of the year. So, there's no way. Just kidding. Yeah, well, I'm curious to see if this handle forms. If it does, then 476 is aggressive. I don't know. Found all-time highs. Sounds like some fib levels to me. Fib as in lies. Yeah, I don't know. 452. A lot of resistances before that, but you can tell I don't have any bias on the SPY. Archer Owl, where were you on overstock? This had your textbook pattern here. We even were watching it for a while. I was waiting for the breakout and the retracement, and it did like a false break, and then it had that news with barbecue. But this is like the pattern you love. Even the tightening, Bollinger, everything. Had everything. I don't know what else you look at, but this one slipped past your scanner. Well, double topping on SPY would not be that high. Be what, 468? I guess you could go over a little bit. Say 475, 476. That'd be pretty far over it. But it'd have to be next year, because this is the high of the year. Tuna Tuesday. Do you see that chart though? Isn't that what you like? That's what you're hoping for on Zoom and Teladoc. That's what you got on Generac. Same type of pattern. Generac's actually a little bit different. This is my idea.
Back the layers here, what you notice is, and what you'll see is that March was a really poor month for Constellation Brands, which is the first month of its fiscal first quarter. And so following March, what you've seen in Modelo and in their portfolio specifically has been much better trends in April and then May, which persisted through June. And so I looked at this as an overreaction in the share price movement to start. I thought it was a good quarter, and I actually did not think that they were going to raise guidance just because it's so early in the year. There's still questions around inflation and impacts to the consumer and that kind of thing. And Constellation typically will not raise guidance in conjunction with its first quarter. And so I thought this again was a good start to the year, and I think they have a lot of momentum within beer now, kind of given the reads and measured channels that we've gotten for the last 3 months.
And you have to wonder why they won't raise guidance, or, I mean, they maintain guidance, but that was something you both talked about. And Garrett, look, I mean, as Modelo Especial, that brand became America's top beer after you saw the sell-off in Bud Light and that decline. Do you think that there might be a reversal, and maybe they even think there could be a reversal back, and that might be why they're just being cautious? Garrett?
Yeah, I think that's right. They're probably just being conservative. Look, it's only 3 months of results that they've posted, so they're probably just being conservative. And there's also a lot of uncertainty, regarding how long this boycott will last. Certainly, it's if you look at the weekly data, it has absolutely continued through June, and so a lot of consumers have shifted to Constellation brands and also to Miller Coors, Molson Coors brands. And so, but we really view TAP as the big winner from this. We think that coming off a much stronger than expected first quarter, they're poised to post a much better than expected
Red candle on SPY.
And there's really a high likelihood, we think, of them raising full year guidance, just given the strength of the recent sales numbers. And so that's why we raised that stock to strong buy just a few weeks ago from buy.
All right, TAP being Molson Coors. Just quickly here.
4 minutes to power hour.
Other elements, wine and spirits under stars. I call it stars. STZ, Constellation Brands.
Yeah, sure. So wine is going to be challenged this year. Organically, they're guiding for flat growth, low single-digit increase in operating income. In this quarter, you saw a high single-digit revenue decline, or I'm sorry, a 6% organic revenue decline in wine. So I don't think people are really expecting all that much from the segment. They're in the middle of cycling a divestiture from October of 2022, which will impact reported results largely through the first 3 quarters of this fiscal year. And so I think the lookout for wine is just, does the consumer continue to gravitate towards more premium products? That likely benefits some of their higher margin brands. And then over time, once you get through this divestiture, the question is, does Constellation get back on its target for, low single digit revenue growth, and then expanding its operating margin to between 28 and 29%, which is more of a medium term target. But this year, especially the first half, will be a
420.69.
All right, cheers to you both. July 4th holiday weekend, everybody. Have a safe one. Thank you both. Gerald Pasquarelli, Garrett Nelson, thank you both. That's going to do it for me here on the watch list. I'm Nicole Penelides. Thanks for being with me. Keep it right here. Caroline Woods, Market on Close, next.
Power pump, let's see. Volume on GME today is so low. Everything's so low, probably. Auntie. IEP's up 2.5.
So with 1 hour left of trading, let's check in on the markets. Major averages holding on to gains. Taking a look, actually adding to
Friday
that.
coming to a long weekend.
Nasdaq up 1.6%
Holiday
right
weekend.
now. Energy leading the way higher.
I'm gonna see a big move down, I don't
S&P
think.
500 up
VWAP, I think, would be most
1.3%.
bearish.
Every sector is in the green except for real estate. The Dow is up even 1% despite Nike weighing on the major average. And meanwhile, the Russell 2000 also up a
Baby
little bit
barbecue
less than
selling for
1%,
15.5
but
million
it's had an
June.
impressive week. It's up about 4%
Bullish or bearish?
on the week, 8%
If they sell everything, yes,
June.
that's very bearish.
Taking a quick look
They
at
sell all
VIX,
baby
it's actually
for that.
lower today, trading around 13.
I don't think that's what the
Take a
bid
quick
was
look at
for, though.
Bitcoin as well. It's lower as well, but trading above
But you
30,000.
seem pretty knowledgeable on it, so you'd probably know what the bid was actually for.
Standing by. Nick, let's start with you. Stocks
Barbecue moving up a little bit
looking
there.
to close out a strong first half of the year.
$7.99.
Really on a positive note. Definitely a positive note today after some encouraging inflation data. What are your key takeaways from this week?
You know, I think it's a really interesting kind of pile-on type week. It was a little questionable, right? With light markets and going into a holiday weekend, there was a lot of even early closures today, Monday holiday. What's really going to happen here? And I think that there's sort of this reaffirming.
Got some volume there on the little barbecue pump.
The numbers, economic, macro numbers are relatively under control in the U.S. And that's why you're just seeing that VIX really, really low. To me, that's the biggest surprise. I know we talked a little bit earlier, Caroline, about kind of the pile into the tech trade and the rotation. And I think that's been talked about enough, the quarter end and all that. But the VIX to me is a really fascinating story, and I just like to focus on that for 1 second because you're seeing some pretty steep contango, which means that the front future is closest to the cash, and as you go further out in time, you're seeing this upward slope. And what that really tells us is that markets are anticipating greater volatility, off into the future, which is not uncommon. But if there's a volatility event that's happening, something that were to really be a catalyst now, you see the reverse of that. You see that backwardation where the front is very explosive and then the backs trend lower. But it's pretty steep pretty steep contango right now, meaning through the fall and by the end of the year, markets are expecting volatility to pick back up. So not a bad week to be positioning, in that way. And you hate to see people pile in and buy the top of markets. So just be thinking about the fact that vol is expected to pick up in the longer term, and ultimately that can be a little bit of a guide. It doesn't mean it has to, but if you have some nice profits there, you can think about hedging those. You can think about trading some options around it. There's some defensive plays as so many sectors have peaked in recent days. We were talking travel, we were talking chips and AI earlier, and there's just a lot that's really hitting highs that obviously could continue. But it's always a good chance to be prudent from a risk perspective and think about taking some profits, thinking about how to hedge those profits if you're lucky enough to be in that position.
Yeah, I mean, we've talked about the Magnificent Seven. One guest called it this morning, just in terms of obviously the Apple, Tesla, Amazon, Nvidia stocks. But when you take a look, in terms of the S&P 500, Carnival is the third biggest gainer on the S&P 500 this year. So seeing strength outside of just big cap tech, and also seeing strength in the Russell now in terms of market leadership. But when you say position for eventual more volatility, what do you actually mean? How can investors or traders kind of actually do that?
Well, certainly nothing is truly, aware of what's going to happen in the coming months. But if you look, the VIX right now is right around 13, right? The cash VIX. The active VX contracts, if you look at Thinkorswim/VX, you can look at the entire list of months. That future expiring in 20 days is about a 15 handle right now. And if you go out about 200 days, it's about 20. And 15 is about the historical VIX average. So, going out beyond sort of, that December time.
You said beyond.
That 20% implies
Live barbecue.
1% move on a daily basis. And I think we're just not seeing that now, right? We're seeing very quiet, markets trending upward. So what I really mean by that is just be aware that, every trend is your friend until it breaks. And if you're sitting in a position where you're just watching, your tech stocks and your travel stocks go up and up and up, where are you willing to let those fall back down to, in terms of profit taking? You can obviously sell the stock, but there's ways to put, collars and different types of option strategies around that to protect gains if you're in that position, because markets have come a long ways in just half a year. And if the concerns about, higher rates persist and, recession and all that kind of does come to fruition, we could easily see a pullback in the second half, I think.
Okay, Renita, I want to bring you into the conversation because we're talking about that Magnificent Seven. Well, one of those stocks, actually all of them, are in the green today, but Apple is seeing pretty impressive gains, up about 2%, crossing that symbolic milestone of $3 trillion in market cap. What's behind the gains?
$27.99 on barbecue.
Yeah.
We see the excitement on this stock. And by the way, to close above that $3 trillion market cap, it's got to close above $190.73. Now, Apple's already blown way past its consensus price target from Wall Street of $187.19. And previously, it had a street high price target of $220 at Wedbush Securities. It was a new price target hike today from Citibank. I will get to that in a moment. First, let's talk about Wedbush, because Dan Ives was just on the watch list, and he's got a bull case for a $4 trillion market cap for Apple. He said on the watch list by 2025. He actually said in his note earlier today, 2026, but he said on the watch list possibly by 2025. And he says that a lot of Apple's power is coming from its services business. It's got a lot more power there and a lot more room to impact the entire Apple ecosystem in the services business. Now, some companies are warning about soft iPhone sales. Analysts like UBS are warning about that, but he says the services business has enough muscle to take that over, and he's expecting it to bring in about $1.5 trillion for that one section alone. Now, he believes also that Apple will add an AI app store as well, and that because Apple has started to create its own chips, it's now honing its own infrastructure. And Dan Ives says that Apple's building the future. I mean, he's got a lot of superlatives for this company, honestly. Also, the fact that the Vision Pro came in, and while it's a super expensive product at around $3,500, he says the point is not really to sell a lot of those, but the point is more so to sell to developers who then can carry on the Apple message and carry on services, and that'll likely be the first product of the AI app store. Now, I do want to talk briefly about Citibank, because they say that the street is underestimating Apple's continued gross margin expansion. That's why they have a new price target hike on Apple to $240 a share. That is now a street high, highest it's ever been. That has about a 24% move to the upside. And Citibank says that Apple is navigating this macro slowdown pretty well as the inflation pressure on consumers. And it's doing that by continuing to grab a greater market share with iPhones than Androids.
All right. So, Nick, I just want to ask you, too, because Renita was talking about that bullish note from Dan Ives on Apple. He was actually out with another note this morning. I was reading that on the broader tech space, saying it's just going to start or continue to heat up in the second half, saying the broader tech space has another 12 to 15% room to run to the upside at this point. Do you think he's getting ahead of himself, or do you think that's a possibility?
I think this will sort of be like other sectors we've seen, where there's a tale of the haves and the have-nots in kind of the medium term, maybe a couple of quarters to a couple of years out. And you look at NVIDIA, for example, and they have a substantial lead, and these are difficult technologies to sort of gain ground, and there's a relatively high kind of defense around them. There's a deep moat, maybe is a better way to say it, around some of these technologies. Apple, with the services and the integration and the detail they put into their hardware, they have that moat. The ecosystem, or the companies that have this ecosystem, are really, really tough to compete with. So I think there's definitely room, and there's no There's no obvious reason why that trend for those big names would slow down. I think a fascinating thing that's surrounding this, though, is the smaller companies and how is there real competition created. We're seeing a lot out of the FTC around, kind of reinvigorating the push to break up, essentially break up monopolies and to really more evenly distribute the power there. And that's not a short-term thing. So to me, the sort of barbell effect here of the haves and the have-nots will likely continue for a bit. And it's oftentimes, when regulation changes that there are changes to that. But right now, it's awfully hard to see what slows down sort of these big names, other than a more global macro kind of slowdown. Go back to Apple for 1 second. I think there's such an opportunity for them still in Europe and China, especially with the rumors that they're going to convert over their charging ports this year to a USB-C charger. It would make them much more compliant with European law, and I think more kind of normalized in China as well. So I think even if the U.S. sales slow and people don't upgrade this cycle, I think you could see some pretty big international developments there and stronger iPhone sales there. So they tend to find ways to sort of buoy their hardware sales, with slight improvements, and then obviously the services, feels like the path forward. So just really tough to see what breaks the ecosystem, I think, for a lot of these big companies right now.
All right, we have to leave it there. Nick Theodorakis and Renita Young, thank you both so much for kicking off the show with us. All right, I want to bring in our next guest. Brian Mulberry is Client Portfolio Manager at Zacks Investment Management. Brian, thanks so much for joining us heading into the weekend. Just want to start by asking you, obviously we're wrapping up the week, the month, the quarter, the first half of the year. Are we heading into the second half of the year? Are you heading into the second half of the year as a bull or a bear at this point?
That's a great question. And we would feel like at this point in time, the conversation you just had taken in stride, that really the potential for the next 10% move is probably more towards the downside than it is the upside for the overall broader market. Obviously, those Magnificent Seven stocks are making a case of
Barbecue
their own.
back down to
But if
VWAP.
you look at the rest of the market by itself, we're seeing economic factors start to deteriorate. And that would generally mean that we would see slowing in things like earnings and earnings growth and
Actually
profitability.
moving back
And
up
on
some.
top of that, we still believe that interest rates remain the most dominant factor in how this market will end up being valued in a couple of quarters. And what we're seeing across the board is obviously a commitment to tighter monetary policy, 1 or 2 more rate hikes still in the future at this point in time. And that means the cost of capital is just going to keep going higher. And so what we're going to see, again, is that continuation of the haves and have-nots. If you are an established business, and a lot of these mega cap companies have reoccurring revenues that they can use to invest in their own future growth, that cost of capital doesn't necessarily impact them where they are. But for the rest of the market that doesn't have that advantage, we're going to see probably some pullbacks as things get tighter and tighter in terms of that cost of capital. So what we're trying to see here is what is the most determining factor for when and where interest rates will continue to go higher. And obviously we got a nice report this morning in terms of PCE, but that core number ticking down 0.1% just isn't enough. We're still over 2 times higher the Fed's preferred mark at 2% inflation. And so it really seems like for us, the case is pretty clear that we're going to see at least one more rate hike in the summer and perhaps another one in the fall. And then what might be even more disappointing to the market is the fact that rates are likely to stay at that 5.25 to 5.5 level for much longer than they've currently priced in. And so that cost of capital lingering, trying to bring, what would basically be the labor market tightness down to try and drive down some of this consumer spending, then we'll see price pressure relieved by that probably end of the year, end of first quarter next year time frame. And then we could probably see some stabilization in rates and maybe even some reductions by second quarter of next year. So that's really going to be, I think, the biggest influence on how the market ends up being valued over the next 2 to 3 quarters.
All right, so I was also looking through your notes, and you say the one constant today is that inflation remains the biggest influence on equity valuations. So if we do see that 10% pullback, as you said, would that reflect a fairly valued market, given that inflation is double the Fed's target?
Yeah, I mean, at least it would be closer to reality in our view, right? I mean, at the end of February, when we saw the terminal rate was being priced in at around 4.7, and now it's being priced in at about 5.4, the market was at, you know, just below 4,000. Now we're at over 4,400. We haven't seen any substantial earnings growth. It's still at $225 in earnings per share on the S&P. That would lead us to believe that there's some type of foundation that would propel the market higher and justify the valuation that it has today. So it would come back to a little bit more appropriate future valuation. If we did get a 10% pullback from here, it would certainly see like it would be more fairly valued for sure.
How are you looking at the consumer right now? Because we've been getting some mixed signals. Obviously, consumer sentiment today came in. We saw it tick higher. That came in better than expected. But then when you hear from some of the companies, just this week alone, Walgreens and General Mills had a very different tone on the consumer than a Carnival or a Delta did. Obviously, they continue to spend on travel, but they're pulling back in so many other areas. But if the consumer remains resilient, how inflationary could that be? And could it just mean that the Fed has to hike rates even higher and keep them higher for even longer?
Yeah, that really would be the base case, is what we've seen. If we just look at the top line of consumer spending in total dollars, it's been very, very resilient over the last 12 months. In the face of rates going up substantially, the actual number of dollars spent by consumers has been really, really consistent. It just means that they're spending on different things. A couple years ago, everybody was refinancing.
The Head and Shoulders are on the hourly on barbecue.
Things like appliances and TVs
is the level.
And things of that nature. That
bounces here and this is a handle, or
now it's more
drops.
about travel, going on cruises,
Head and Shoulder plays out.
hotels, buying airline tickets, and that kind of stuff. And so
we'll maybe
it
be
just
seeing
kind of seems to be a little bit of a revolving door of
again.
what consumers are spending on, but the level of spending has been very durable. And as long as consumers keep spending like this, we would see prices fairly durable as well. And that means the Fed is going to have to keep tightening. So again, feeding back into that higher for longer narrative. And at some point that will erode profitability to the point where we'll start to see, you know, a lot more pressure on earnings being revised downward. And that should put negative pressure on the stock market as well.
But Brian, we really have seen for most
New
of the
high
year,
of the day on SPY, 444.14.
We were talking about how reopening has joined in, talking about how small caps have just started to join in this month. But overall, you know, a lot of the
down
market
move.
hasn't seen the impressive
Getting it.
run-ups that the big
Can
tech
happen
stocks
just
and
fast.
the AI stocks have. So would you be more likely to find
Maybe.
value in some of the other areas of
Maybe
the
in the
market?
last 10 minutes, just a move back to VWAP.
Putting money to work
After
right
melt
now,
all
because at
day.
the end of the day, a 10% pullback
3 hours.
isn't all that huge.
No. Yeah, it's a great question. What we would be looking for is quality. And if I just simply define quality as cash flow, those companies that have good and growing earnings and they're being good stewards of that revenue coming in their balance sheet, they're going to have an advantage because, again, they can invest in their own future growth without the high cost of capital bothering where they're going at this point in time. And so what we would be looking for is, you know, good free cash flow metrics and positive earnings growth in the spite of rising interest rates at this point in time. And so it might be a little bit more defensive than some other allocations, you know, but you can still dip into some of those, you know, technology names that have done well because they do have that moat that is around them. The cost of entering that particular market is so high. If you have to borrow that money as interest rates continue to go higher, then, you know, for any of those businesses, it's going to be difficult. So looking at it specifically from that quality perspective in any sector and any market cap, we want to look for those types of names that are actually generating revenues and able to invest in their own future growth. We think that's going to be a big difference in the back half of the year as interest rates continue to go higher.
All right, but stocks over bonds?
I would still say so, yes.
All right, Brian Mulberry, Client Portfolio Manager at Zacks Investment Management. Thank you so much for joining us.
Thank you for having me.
Have a great weekend. Coming up, Johan Gran, head of ETF strategy at Allianz Investment Management, will join us. He'll tell us all about buffered ETFs and how traders can use them to their advantage. Next, stay with us. We'll be right back after this quick break.
Okay, did it for Owl. Got a little exposure on Teledoc. The potentially just a scale in. We'll see. Premiums are cheap enough, though. It probably won't lose a whole lot of value unless it just starts flushing through all those supports. One thing I really like about the last couple picks, Al. Getting options when they're basically as cheap as they're going to be, unless there's a drastic move in the wrong direction. Got 40 October calls. 40 strike. I didn't get 40 of them. Choose. Not for long.
For 2022. Now we haven't seen that as much this year yet, but that is a lingering concern. And then you also have a concern about the inflation that keeps eroding their invested capital, eroding their cash portfolios. And then, of course, you also have this looming, very, very looming recession that's been talked about for a long time, right? And Americans keep hearing about this, and of course, the worry will still be there. Now, I know we saw some consumer sentiment numbers come out today, and there was a little bit of a blip on the upside surprise, but still 64.4 is a far cry from where the numbers were pre-pandemic, that when they were close to 100, just as a reminder of that. And it also supports the fact that you saw numbers that were in the 70s and the 80s during the pandemic, the height of the pandemic. So I think those numbers are speaking the same truth that we see from our survey, that Americans are in fact pretty anxious about where we're at, despite all the positive news on the economic side.
Yeah, just looking at some of the metrics, 6 in 10 American boomers would rather have their money sit in cash than endure market swings. Granted, cash is paying, 4 or 5% in some of those higher interest online savings accounts. Only 2 in 10 American boomers agree that it's a good time to invest in the market right now. So how are you seeing this play out in terms of ETF behavior?
Yeah, it's very interesting because it makes it for it's a dilemma, right? You have people that know that they need to put more money away. They know that they need to get into the market. And then you have only 2 out of 10 that say that it might be a good time to actually do that, right? And that's where I know you wanted to talk a little bit about our ETFs, and we have our buffered ETFs, and it helps investors like these investors that are anxious and nervous to move back into the market to get some exposure to equities without taking all the risk of equities. So that's one trend that we've seen, and it's been playing out over the past several years. It's a relatively new space of the defined outcome ETF space, but it's also been growing tremendously over the last couple of years here. And we've seen the continuous demand from investors that want to make sure that they are feeling that they have some type of risk mitigation built into their portfolios.
So let's talk about ways to mitigate that risk. What's your investment advice for those who are approaching this market with anxiety and caution and who believe that very looming recession, as you said, is actually going to come? What should they do?
Well, look, it's easy to get the trades wrong. And, it's a 50-50 chance for most investors to get it right. So the buffered ETFs that we have, they help you invest to get some of the upside. And for those that may not be familiar with buffered ETFs, they give you exposure to, in our case, the S&P 500 up to a cap. So you can make up to a certain level of returns from these ETFs. But at the same time, you have a buffer on the downside that will absorb the losses from the S&P 500 if it goes down. And the buffers that we have are either 10% or 12%. And then the outcome periods are up to a year, but you can also get a 6-month product from us. It sounds a little complicated, but once you get a better feel for it, it's pretty simple and pretty straightforward. But the bonus here is that as you're investing and you're giving yourself an opportunity to participate in the equity market, you're also by definition avoiding sitting in cash where you're going to erode away due to inflation. You're also avoiding sitting in fixed income because you're now trading on the equity risk premium instead of the fixed income premium. So you always have, as an investor, you have a balanced portfolio for the most time, right? Most investors don't put all their eggs in one basket. So if you have multiple different asset classes in your overall portfolio, this gives you an opportunity to participate and gain some on the upside, but it also gives you a nice risk absorption buffer on the downside.
I guess what is it that these buffered ETFs have in terms of holdings that help buffer on the downside? Because it sounds like it's still investing in the index, but then what's the downside cushioning?
Yeah, so the cushioning, they're really just options contracts that we're packaging in these ETFs. So that is something that an individual investor can do on their own. It gets a little tricky and complicated, and we'd like to think that we're pretty good at doing this. So we're providing this in an ETF, also makes it liquid. It also gives you an opportunity to trade daily in this ETF. So if you find yourself at a point in time where you want to either enter or exit one of our ETFs, you can do that at a given day. It makes it very flexible, and it brings about multiple use cases that we can put forth. So for example, if you were in our January product and you were invested on day one of this year, so January 1, 2023, and you put your money to work and you still own that fund today, you're up about 13.5%.
Just consolidating here. Very mellow power hour. Want to make any two sudden movements before the holiday.
Stay buffered. Johan Gran, head of ETF strategy at Allianz. So much for joining us.
You bet. Thank you.
Coming up next, it's time for Options Corner with Tom White. He's looking at trades in Apple, XPeng, and Carnival. Stay with us. We'll be right back.
So that ETF buys the SPY, and then buys puts.
there?
Well, it's a release of a new model, right? They're going to compete directly with the Model Y. The Model Y is selling out in China across the board, but it starts at about 37,000 US dollars over there. XPeng released today, or they announced today, that they're releasing their new G6 SUV that's going to be about starting at 29,000. So a lower price entry point. And this has got some of their self-driving technology in it also. So this is going to compete directly with Tesla in that market. Now, sales across the board, you've seen decreases in stock prices year over year in NIO and XPeng and Li Auto due to the sales that have slowed down. And the recovery in China has been slower than expected. But this is supposed to be a big model that XPeng is relying on. And we saw some call buyers come in on the back of this news today also. On the upside, call volume is exploding to the upside in here on this move today. But it was in the July 7th weeklies. It's expire in 7 days. The 13 strike calls, they bought over 10,000 of those. Average debit of only about 75 cents. This is a low price stock. So that break even at $13.75 over the next week is about 3% above the current share price in XPeng. In call volume, as I mentioned, exploding. It's about 5 times normal daily average volume that we've seen over the last 5 trading sessions. So yeah, some good news here out of XPeng. It did also, CLSA did come out and downgrade the stock, but raised the stock, the price target on this one. Kind of a nothing burger on that one, but definitely some bullish sentiment in here today.
Yeah, and it's chipping away at those one-year losses, up 70% this month. Another big outperformer this month, of course, has been Carnival. It's up 66%, 112% year-to-date, and you found a bullish trade for Carnival as well. Tell us about that one.
Yeah, I guess my money doesn't matter when it comes to cruise lines because I'll never take one here, Caroline. But, you know, the data and the metrics that they've been seeing as far as bookings goes, some of these companies, Carnival included, RCL and the Royal Caribbean, and then NCLH, Norwegian, they've actually been overbooking their cruises because demand has been so high. They always get a bunch of cancellations. But on their last quarterly report, the stock did sell off post-report, but they did lose less money than they thought. They're thinking they're going to be profitable by the end of 2023 due to the demand in bookings. It did get upgraded today out of Jefferies. They put the price target up to 25 from $9, so pretty substantial move there to buy from hold from that analyst. But they're in there buying shorter-term calls also on this rally. You mentioned it's still up about, what, 66, 68% so far this month. Traders bought over 9,000 of the 19 strike calls in the July monthly series, so you got 3 weeks till expiration on this. Average debit, they paid about 70 cents, so that break even at 1970 over the next 3 weeks. That's about 5% above the current share price in there, with call volume about 3.5 times normal daily average volume that we've seen in trading over the last week. And we've seen some heavy volumes in there.
Hi there on SPY.
Over 3 times the amount of calls trading here today.
20 minutes to
Pretty
go.
substantial as this stock continues to be a parabolic move to the upside.
Yeah, one of the best performers on the S&P 500, and I stand corrected, 134% year-to-date gains at this point, given today's run-up. But I'm with you. Won't be getting on a Carnival ship or a Royal Caribbean ship. No, thank you.
Yeah.
All right, Tom White, always a pleasure.
Thanks.
All right. Coming up, Jenny has our developing story. Nike continues to fall after earnings. She'll break down what analysts are saying. And Scott Bauer is tracking futures as PCE inflation data shows price gains slowed in May. Just going to take a quick break, but we'll be right back.
No, I don't think you're gonna get Jenny anymore, Christopher. We did see her though. She's on the road. Maybe you did, I don't know. I don't even know anymore.
Welcome back to Market on
Yep,
Close.
you
It's
nailed
time
it.
for a developing story. Let's check in with Jenny Horn, markets correspondent here on the network. So Jenny, we're talking Nike today. Shares under pressure. Reported mixed results last night, but it seems like investors are just focused on the negative.
Right, Caroline, it doesn't seem totally surprising that the street is focused on all of sort of the pitfalls here of this report, but we do know that top line did rise 5% year over year. Their top line did actually exceed the street's forecast. That was a good thing, but in terms of their operating profit, this did decline about 28% on a year over year basis. Margins also coming in lighter than expected at around 9.5%. That's versus the 11.6% they reported a year ago. And I think that when looking at the way the street feels about this name is there were a lot of these expectations for some disappointment already priced in. I mean, one major concern was this return to selling at retailers like Macy's and DSW, and a big question mark around its direct-to-consumer strategy, which has since been pioneered somewhat by Nike, honestly, and frankly taken by so many of the other retailers. Another major concern is China and timing this recovery in the overall market, which has been somewhat disappointing over the last 6 months to 12 months. And third, there was this really growing belief that Nike may be losing market share.
She's on the road with another dude in like some suburban town
as well as Hoka,
at a conference or something. I think they have a booth there.
On a year-over-year basis, and we have seen some of these companies come and chip away at market share, and that is still Nike's bread and butter. So those were all major concerns.
The older guys there too.
We did see analysts come in today. It wasn't all negative. I will say there was somewhat of a mixed picture from the analyst community, but B of A lowering its price target, keeping a neutral rating. Deutsche Bank also lowering its price target, but keeping a buy rating. B of A reducing its price target, neutral rating, and Citigroup also did keep a neutral rating and maintained its $109 price target. The most positive note I could find was out of UBS, raising its price target to $150 a share from $145 with a buy rating, saying the stock may underperform in the short term as a result of this lackluster fiscal 2024 guidance. However, they still see that with Nike's continued investments in its product innovation, its supply chain speed, and its digital footprint, this could unlock a multi-year period of above average growth. So that was still really positive. We are seeing shares continue their weakness
candle there on the
today,
5
but
minute.
it wasn't necessarily like analysts saw this as a doom and gloom type of event.
Right. It's definitely a mixed response in terms of price targets, but overall analysts still pretty bullish on this name, although it has been underperforming the broader market this year. It's down about 5.5% year to date. I will say John Kernan from TD Cowen was on Morning Trade Live today. He's still bullish with a buy rating, cut his price target to 125, but his top pick is Deckers, which owns Hoka. And if I remember correctly, Jenny, you wear Hokas, right?
I do. So I'm a huge fan of Hoka's as well as Saucony, which I believe is a subsidiary of another major company we discussed. I can't think of the name right now, but Hoka's, I will say, has done.
It'd be hilarious if this was just in her house, in her kitchen.
Everywhere now. They're on social media. They
A huge banner on her wall.
All of these different channels are
She's sitting at her dining table.
On like Anthropology, Free People's websites. They're on DSW. I feel like I can't escape Hoka. So as far as a branding perspective goes, they've done it brilliantly. And I did run the marathon in Hoka's, so I will say, all things considered, they have a beloved spot in my heart, Caroline.
All right. Well, Saucony's owned by Wolverine worldwide. I'm an on-running shoe fan, but I don't use them to run. All right. We'll have to leave it there. Jenny Horn, thanks so much. All right, let's broaden it out from specific stocks and look at futures now with Scott Bauer, CEO of Prosper Trading Academy. Scott, we've been talking mostly about the markets so far, so I want to ask you what's going on with the bond market today. Seems a bit quiet on the heels of this inflation data.
Yeah, it really is, Caroline, and I think it's just kind of everyone is ready for the weekend, the market included. You know, we've got some mixed signals all week. With that inflation data this morning was really the first time we've had some, you know, let's call it dovish sentiment or dovish data come out in quite a while. And, you know, the bond market, I really think that a lot of people are just on vacation, and it's going to stay relatively quiet until next Wednesday, until we get through the 4th. That being said, I think there are still some pressures here on the bond market. The overall theme is that we are seeing really the hawkish nature from the Fed, from the data that is coming out here. So I think that we probably will see bond prices start to go down a little bit. But again, at very low volume. And until we get to next Wednesday here, probably not going to be much.
What about in terms of oil? Because I'm taking a look. The energy is actually the best performing sector on the NASDAQ today. Oil is up a bit, up about 1%, trading around $70.54. Do you think oil is trading as if we're heading into a recession or as if we're avoiding a recession?
And the answer is yes to that. I think that oil is trading off of the data that we're seeing coming out of China, because just recently, and probably why oil's up a little bit today, we saw, you know, stockpiles go down a little bit. But this big headwind overall is really the demand or lack of demand coming out of China. Everything else seems to be working well in terms of the oil market, in terms of, you know, obviously the Saudis cutting production, et cetera. But this demand issue, it's not a supply issue, it's a demand issue, which is a major headwind. So as you can see on the chart here, you know, we've been making lower highs, lower lows, but really consolidating. And I don't know what will take us out of this consolidation of, you know, 66
getting ready for that 10 minutes Fugazi.
Other than a pickup in demand in China. They come out with some positive news. Or if OPEC comes out and says, you know what, we're going to cut another couple million barrels.
All right, so we'll have to keep an eye on that. What about in terms of gold? Because I'm just taking a look at the chart for gold right now. It's sort of been in a downtrend since May. But as you look ahead to the second half of the year, what are your expectations for gold? Because this market has seemed kind of risk on at this point.
Absolutely. And you know, it's approaching 1900, or we're right at 1900. And the market likes big round numbers.
Hey,
so
Emperor.
I wouldn't really look at that as any sort of major technical area here. But it sure seems like the bears want to hit 1900. And I think that's all
You too, Jay.
because
Happy
the
Independence
dollar
Day.
has held in there relatively strong. The Fed has obviously been more hawkish with more rate hikes on the table, 89% probability that they're going to raise in July. That being said, though, I think gold is held in there really well. So if we do start to continue to get some economic reports that are maybe like what we got today, that are a little bit more dovish, and maybe the Fed starts to shift, or we definitively say, okay, we've got one or possibly two more hikes, quarter point hikes ahead of us, I think we could see a nice rebound in gold. Again, 1900 is just a psychological number, just as 2000 is also. I think that gold can drift lower, but spike higher from here.
And just finally, what are your expectations for the dollar at this point?
Dollar also has been very range bound, and there's been really every reason for the dollar to you know, kind of sell off, other than what we've heard out of the Fed. And I'd be a little hesitant to be buying into the dollar here, because if we truly are getting at, you know, towards the rate cycle raises that the Fed is doing here, that's going to put a lot of pressure on the dollar. But we've seen that story before, right? We've been through that multiple times already, where we thought that the Fed was at the end of the cycle here. But I do think overall the pressure is to the downside in the dollar.
All right, we'll leave it there. Scott Bauer, CEO of Prosper Trading Academy, thanks so much. Have a great weekend.
You too, Carolyn.
Thanks. Coming up, our Schwab panel will join us, breaking down the inflation picture and the first half market rally. We'll be right back. Stay with us.
Which goalpost AC? You're at the market. It's addicting. Well, this could be the low. Could be the low for the next couple weeks. Kind of an important level though. Now whether we have a head and shoulders here, but a little more stretched out, and we're gonna handle on this cup. So this level holds and we bounce. Very good. This breaks. Yeah, good to see down and back to the teens. Fine, new high there. New high in the year actually, huh? Yeah, it's just yearly highs. New high of the year coming into the end of the day of the half year. End of the quarter. End of the first half of the year. Wow. Hey boys. Hey, that's me.
And then you still have, although we're starting to slowly convert some of the bears here, it doesn't feel like that everybody's on one side of the boat. If everybody was bullish right now, I'd be worried, but it still feels like there's a healthy level of skepticism. So I don't think we're out of the woods in terms of the Fed and
today's Friday, and I don't think we're filling it.
Whether or not we potentially have
next
a
Friday?
recession, but it's
Let's
not
make it filled before next Friday.
So that may not be something that we worry about until we get into the back half or Q4 of this year or Q1 of next year, if it happens. So in the meantime, the path of least resistance just feels to be, higher.
Yeah, you talk about that investor skepticism. We were talking with Johan Gran over
We
at
didn't fill it.
He was saying that 2
We
in
made a
10
new gap.
boomers agree that it's a good time to invest in the market right now, according to their
We had a gap
survey.
here.
So it's not
We
all
gapped
positive,
above it.
or at least not
So we
always
actually made the
positive as
gap
major
bigger.
Averages make it look. But Colin, I want to bring you into the conversation and talk about, as Nate said, the relatively benign inflation data. Obviously, inflation continues to moderate. What do you think is a good idea in terms of timeline for when we actually see inflation at the Fed's target, though?
The timeline at the Fed's target, it's probably an extended period.
We said they'd fill the gap.
Where we are right now,
Yeah, but it actually didn't fill. It gapped above it. But yeah, we're above it. Is what we were thinking. Making the right side of this cup.
But obviously, we're focusing on the trend. And when we look at this morning's release, we can tell by the market reaction that it was sort of a sigh of relief from market participants.
But we actually didn't technically fill it. We made it bigger.
Is sticky and
the gap up today.
To be sticky and rightful concerns. I mean, we've seen elevated readings, but the fact that it didn't surprise to the upside, and the fact that if you look under the hood, some of the key things that the Federal Reserve is looking at, like
you can see it's great. Shaded. This whole bit here, from where we closed yesterday to where we opened today, is a gap now. We had a gap coming down right here, 439 down to whatever 438. We would have filled that if we opened it yesterday's high and rallied up. We opened way above it, so we made a new gap. We gapped above the gap.
Continue to either tighten or keep restrictive monetary policy. Whether that means 1 or 2, I think remains to be seen. But we wouldn't expect rate cuts or anything for a while. But we do think that they'll likely.
Closing out. Don't you guys get fired on the holiday? That's no fun. Buys up 1 1/4 today. No business shorting this. Nice bull flags, bounces off VWAP, double bottoms. Did have some head and shoulders here that moved down to VWAP, but then the inverse head and shoulder, which made it to the high of the day and then broke out, and then just flying continuation going on. I do expect to pull back next week. We'll see if it fills this gap before making reversal and cruising back up to the highs, or if we just double top and kind of come down, gap fill, bounce off a lower high, and keep coming. So I'm gonna sell up next Thursday. Yeah, next Thursday. Could even be Wednesday or Friday. But is it selling off, or is it? Are we gonna actually just reloading for higher for a handle? That's what we don't know yet. But yeah, we did. We rallied up to the highs. And here we are. 1 minute. Happy first half of the year, everybody. Happy Independence Day to you. Be safe. Have fun. Take some risks. Make them calculated. See you on Discord. See you on Twitter. And I'll be back Monday. We'll probably stream half day Monday. It's gonna be slow, but we'll stream it. There you go. There's the bell. So options didn't work again today. And the stupid day trade. I was actually green on them some, and yeah. I have to reconsider. Thanks, Christopher. Thanks, Tao. Barbecue closed down 6%, 27.40. This is kind of an important level for next week. Need to hold this and bounce. We break here, I'm gonna close back out. We break to the upside, I'm gonna open up more on a higher support. We turn 30 back into support. The SPY sell off after hours. Do it. Will Weeble let me close this after hours? Oh, dude. What? Gotta make it extended hours. You not do extended hours in Weeble? The heck's the limit price there? I gotta test this out. What? I don't think you can do it on Weeble. To the moon. Thanks, DIY. Thanks, Tao. Thanks, Kitty. Thanks, Emperor. Likes to 50. They're not as valuable this late. The likes draw more people in, but we're ending. Still appreciative and still help. Thanks, guys. We'll see you on Monday on Discord. Sub up, like up, comment down. Happy money sticks around. Thanks, Sterling Archer, for your dono today, as well as you, Guts, for the long term. Appreciate it. Thank you, guys. Have a good weekend. Peace out.